a lot more of these companies are requiring to be in the office, and they are getting rid of some of those jobs where you could work from home. By the way, Carvana, so, we're talking, JPal's talking about the labor market's not a concern, but you got this headline with Home Depot, headline with Amazon. Carvana had an ugly short report today. 20% down. I haven't seen 20% down on Carvana in a couple of years. Now it's only 15%, but still took a big hit. Gotham City Research basically said the earnings for the past 2 years on Carvana are overstated by over $1 billion. Didn't read through the whole report, but basically they said they've been lying for 2 years. And, I've heard this critique of Carvana for a long time in terms of how they count their revenue. Hasn't stopped it from being literally the best performing stock since 2022 in the entire market. But that is the short report, and that's why that stock was down 15% on the day. All right, Microsoft, Meta, and Tesla. I'll have a bunch of people joining me in a couple of minutes, and we will get into the coverage for Microsoft, Meta, and Tesla. I think let's start off with a couple polls and see what people are thinking. First of all, let's just put in the chat, which one of these three are you long? And let's put another question. How heavy are you in them? Like if Meta gaps up 10%, do you get to go to the wife and basically say, you're happy you married me, right? Or do you get to go to the hubby and say you're happy you married? Like how deep are you into these companies and what will they do for the portfolio today? Celestica, we have earnings, FICO, Southwest Airlines, Waste Management, Lam Research, ServiceNow, IBM, Tesla, Meta, Microsoft. Those are the earnings that we have today. I have no expectations for ServiceNow. A lot of people have been asking me. They did a stock split. Stock's down a lot since the stock split. I have no idea. I mean, this is not a high growth SaaS company. I think they're going to grow probably at 19%. AI is a tailwind for them, but it's not the biggest tailwind. So no real thoughts on ServiceNow. Same thing with IBM. They've had a good couple of years, but we've got to see what real growth they can put up. Tesla, Microsoft, and Meta are going to be the main ones that we have to talk about today. I'm seeing a lot of people deep Microsoft, Meta, and a lot of people deep Tesla. I'm seeing very few deep Microsofts, and more people are heavy Meta and Tesla. So we're going to be listening to Meta, and then we're going to be listening to Tesla, and to help analyze and understand everything that's going on, ladies and gentlemen, Mr. Tanner. Tanner, what's up?
How's it going, brother?
Are you excited?
Dude, I couldn't be more excited. I'm mostly excited, honestly, for Meta. A little bit more than Tesla, to be honest, but I can't wait to hear when Elon speaks. You got to listen. So I want to hear more about the optimists and when they actually think they're going to start selling these. So really excited about that. Back-to-back calls. Got to love that.
Back-to-back calls. So I just put the poll in the chat. Which one are you heaviest in, Microsoft, Meta, or Tesla? We're going to do Meta from 4:30 to 5:30. If I'm not wrong, it starts at 4:30 p.m. Eastern. We'll get to Tesla at around 5:30. Hopefully we skip all the boring stuff, get right into Q&A, but Meta will be first. So it's not going to be Tesla first. For those that want Tesla, I'm sure there's other channels, but we'll do Meta first. Tanner, let's start off with the coverage. I mean, you've been championing this name for the past couple months now. I think you are really a fan of the valuation and the growth prospects. What are you expecting for Meta today?
So I think there's two things. I think what investors want to see is a slowdown in capital expenditures. I think that's honestly what would get this stock to just rocket. But we've seen Zuckerberg talk about meta compute. I think that he's going full on artificial intelligence. The spend is absolutely real. We are not going to see a slowdown in capital expenditures. So maybe they give a very broad range, and then as the quarters come in, they tighten it like they did last quarter and tighten it more to the high end of guidance. But in a way for me to sort of hedge those bets is that my largest position is NVIDIA. So where that spend ends up going to, NVIDIA, Meta's the largest customer of AMD. So AMD is another way to play Meta Compute or a lot of those other, semi names. So I think that they're extremely cheap. Cheapest name in the Mag 7 right now, growing at high 20+%. And I think that a lot of their advancements in artificial intelligence will make their ad platform much better at being able to target users, high conversion rates. I think that's really exciting.
Are you afraid? I know you mentioned the capex explanation and how high they'll guide for. Are you afraid that capex is high, which is great for NVIDIA and AMD, but then Zucks messes up the explanation of why the capex is so high?
Yeah, I'm very afraid of that. That's exactly what happened last time. almost you had it on NVIDIA's call, Jensen having to explain how Meta is going to use their spend on chips to better their advertising platform. Hopefully they did some little bit of practice runs before earnings on what Zuckerberg's going to say to try to calm some nerves. But yeah, I'm not 100% certain. I'm very excited, though, because of this current pricing, that there's a likelihood that he surprises to the upside, then confuses and makes things worse.
Yeah, I agree. As you can see right here, 52% of people are in Meta. So this is obviously pretty heavy. Then we got Tesla and Microsoft. I am confident the stock is undervalued. I think most of us that have a decent sense of valuation can effectively say, looking at the growth rates, 27% revenue growth, like that's not easy to do at a basically $2 trillion size of the company.
Yeah.
But the reason the stock fell last time from 750 to 585 had nothing to do with the earnings. It had to do with the fact that Zuck's went on the call and he would not explain outside of advertising what they're spending this capex on. Now, Meta Compute, this sort of neo cloud narrative that they're going into, I think that is a really juicy form of diversifying revenue, which obviously means they have to increase capex. But if he gets on the call and he's like, yeah, we're building out this Meta Compute thing, we think we're going to need more compute in the future. And then the analyst is like, so are you going to sell this compute to other people? And he's like, we haven't really got that far into thinking about it. I think that stock takes a dump. If he doesn't come with a business plan of like, we're going to spend 20 billion on this, we're going to license it to XYZ, we're going to sell business services on top of it. If he doesn't come with that, I don't know. I think he can get ugly.
I think it's very similar to the ChatGPT thing, right? I think they are sort of getting bombarded with like 100 different ways that they could use artificial intelligence to better their businesses. And they're not exactly sure which direction they're going to go in just yet. Like, in my opinion, I think the biggest potential for Meta still continues to be in advertising. Like, yes. I don't actually think that they need to get out of anything else or create new products or anything like this. I think like a MIT, right? Right now, Coca-Cola might want to target you, and they're looking at a young male in New York City or Jersey, and they're trying to figure out some things about you to target using their existing campaigns. Well, what if they could make a generative AI video created by Meta to target a MIT? So, maybe a couple rainbows, UPS driver, stuff like this.
Honestly, if they have a guy in a British accent in that video, I'll buy the Coke. Like that's
if they're buff and the shirt's off, you'd buy the Coca-Cola.
I just need the British accent. That's it. That's all.
But hey, I don't judge, man. You're British accent, whatever.
The point is that generative AI experience, you think that could be a tailwind for Meta long term?
Yeah, like creating an entire generative platform for artificial intelligence, increasing the conversion, and actually allow, like, if ChatGPT can increase the total take rate on advertisements because they think that they can target people so great, that's going to be a massive tailwind for Amazon, Google, Meta. The advertising platform will be able to charge more, like higher and higher rates because the conversion raises, and there's a likelihood that those people go directly from the advertisement to purchasing the product because you got them on the advertisement. British accent, all that sort of stuff. You get to buy the Coca-Cola. They'll pay a lot for that.
All right, let's bring on two more people who are going to be with us for this earnings extravaganza. Jose and Neil, what's up?
Hello, guys.
Hello.
How are you, chaps? Good evening, Amit. I heard you like British accents.
It's actually really good. It's way better than mine. We'll talk about Microsoft. We'll talk about Microsoft and Tesla in a second, but I want to get your guys' quick takes on Meta. Neil, we'll start with you. Bullish, bearish? What do you think?
Bullish. I mean, the stock is higher. Where is it? Yeah, I mean, we were at $600 not that long ago. We're now at $670. Seems like the market maybe had overdid it before, but I agree with Tanner on the comments during the call. I think there needs to be maybe a clearer vision. I don't think it's going to be a metaverse type of scenario, but yeah, maybe probably some meta cloud questions. What's the story behind it? What's going to be the monetization strategy? But I agree that for now, this is purely an advertising play, like targeting much better, higher margins and all of it. And then as for the rest, the reality labs and all of it, I don't know. their AI team, I guess I would assume in the next 12 months they have to come out with something, right? I mean, you cannot hire the Avengers of AI, pay them hundreds of millions of dollars in salary, and come out with Llama 4, which I don't think I've met anyone that's using Llama. So they'll have to come out with something to justify all of the spending, and hopefully it's quite clear during the call.
By the way, silver is now literal pennies away from breaking all-time highs that it broke 2 days ago. So maybe 2 days ago was not the top for silver. Jose, your thoughts on Meta today?
Bullish on Meta long term, like Tanner. I mean, I think the overall core business should just be focused on the advertisement space, and I think that has plenty of tailwinds with AI. I'm actually, it seems you guys actually want Meta to sell AI compute. I don't want them to do that. I think this Meta compute that they did is just to kind of have better organizations of their data center. I mean, just last quarter, I think they mentioned that they were constrained in compute, both for their core business and for their AI business. So if you come up to me today and tell me, look, I'm actually looking to selling AI compute, it would tell me that they overinvested in AI. So I would see that as a completely irresponsible direction of what they did with the AI infrastructure. And I don't think that's going to be the case.
If Zucks can sell it to other people and get some new forms of revenue, do you think that could get the street excited?
Yeah, I think it could. It could, right? I think the market would maybe like it, but to me, it would just tell me that Mark was too aggressive in this AI race. If just last quarter you told me that you didn't have enough compute for your core business, they said their core business was still starving. They mentioned their AI their AI research and development was still starving. So if something changed in just a quarter and you have to go out and sell your compute, it tells me, I don't know, it leaves something bad, a bad taste. If I don't know if I'm overthinking it, but when you tell me one thing 3 months ago and then you go out and sell and you want to sell it, it tells me you bought too much of it.
But can I step in here for a second? There's going to be a massive step function in how good these chips are over the next coming decades, like what Metacompute is saying. It's not just right now, it's going to be over decades. Hundreds of gigawatts. That's all going to be for core business practice?
I don't think in the future. So okay, Tanner, I like this. So if they give me like maybe in 5 years, we're working on this because in 5 years, maybe we want to go down that road of selling compute, that'll be different. Okay. I do think that in that process, you might have some you might just have too many chips in some near future. So if they're working on the plan to do that 2-3 years out from now, I wouldn't be as mad. But if you were to tell me that you're planning on doing it for this quarter, I think that's where my negative sentiment will be stronger in.
What if they use it just for, building on their own stack? And that's because 3 months ago, or maybe 6, I think it was 3 months, they said they've had plenty of people come to them and ask for to have access to what they have. What if it's just their way, just like NVIDIA invests in other companies, making sure that the ecosystem grew over the last decade plus? What if this is Meta's way to make sure that the Meta ecosystem grows and eventually they monetize whatever they'll come up with?
But what ecosystem would grow with them selling compute, right? Is it just the Llama ecosystem, or what's the real?
A good start, no?
Yeah,
Okay, so yeah, people start.
Well, that begs
I
the
honestly
question:
think
is Llama even good enough to build an ecosystem around? Right?
I don't think right now, but we've seen so many. Like, look back at Google Bard. Like Google was out of the game early on. I think that you could see a big change in the leaderboard of which LLMs are the best, and Llama could step back into the game. We've seen Google go from a nobody to Gemini 3.0 is the biggest talk of the town. Now Claude is, right? And maybe ChatGPT or some other player will end up hitting the top of the leaderboards again with new tools and practices. And maybe even, I think people are overstepping just how big a generative AI campaign, I don't even think you need to think that hard about it. If Meta can end up helping create these campaigns for other businesses rather than just being a platform to, give them the users, give them the tools to actually create the campaigns and the actual assets, then to go out to the customers with Meta's assets and their customers.
All right, let's transition to Microsoft, and I'm putting the Meta pump or dump poll in the chat, so you guys can let us know what you think. Microsoft, I mean, this is the one that it seems like the audience is the least allocated to. I think out of all four of us, we're the least allocated to it. Let's start with you, Jose. Any thoughts on what they have to show today?
I think I'm just overall excited with the cloud space, right? So this is going to be the first cloud player to actually have a cloud business give us results. I think they're going to say the same thing. Cloud service providers, they're short in compute. They're going to need to increase capex. Yeah, so overall bullish in Microsoft for their clouding aspect. You might see some pressure and headwinds on the consumer side, especially kind of the laptops and market, just because of memory prices. We heard from Intel last week, I think they reported last week, that Intel is actually pushing away from wafers on client side to go more into the server side. One of the main reasons is the memory prices are getting too crazy in the client side that you start to kind of fight on margins. So that can put some pressure into the consumer space, which obviously we know Microsoft has some dependency. Luckily, they transform more into a subscription base for that market, but super bullish for that cloud space of Azure.
Neil, anything other than Azure you think they need to show today, or is that going to be enough in your opinion?
Whether it's enough or not, I don't know, but the focus is definitely on that. It's on cloud growth for sure, as Macron would say. But yeah, no, it's definitely cloud. I mean, what else should we focus on? The gaming aspect? Probably not. 365, I don't think the market is interested in anything else other than Azure growth for Microsoft. And then we'll see. I still expect it to grow quite quickly based on the comments that we've heard from OpenAI. So wouldn't be surprised if they continue to grow much faster, which is probably going to be good for the likes of Amazon and Google Cloud, because I also think that they are still growing rapidly. So focus on that. And I think, and again, the guidance is on the call. So whatever happens with the stock before the call is irrelevant.
I don't have much to say about Microsoft, but who do you guys think is going to be the biggest winner tonight? Like you said, pump or dump to the chat, Amit. What do you actually think for Meta? Like, just going around the panel, like, what is Meta, pump or dump?
Look, I want to say pump because I think the stock is undervalued. It's so hard to pick on this one. Like, if Zucks messes up this call, it's dumping. Like, it's like it didn't dump last time because of the numbers. The numbers are going to be phenomenal. It was ad season, holiday season. Meta probably had amazing numbers. There's no big, beautiful bill tax thing they have to deal with. I really don't know how the call is going to go. I genuinely don't know for this one, but I hope it pumps. Let's talk about Tesla. This is a big one. I don't even know if Tesla pumping or dumping really matters for the broader market, because Tesla gets put in its own box. It's a special stock. It has a special premium. Jose, what do you think Tesla has to do to get a little bit of a pump today?
So this one, I actually think in the short term will be kind of a dump. So if you were to I can only choose pump, neutral, and dump. Pump would be Meta, neutral would kind of be Microsoft, and dump would be Tesla out of the three today. The thing is, I mean, obviously the robotics is a long-term tailwind, but I don't think we're going to hear much about that. I don't think we're going to hear too much about robo-taxis either. The consumer space is definitely, I don't think we're seeing crazy amount of numbers of sales either, or going to be pushing this upcoming quarter, even though we already know what the sales were for this past quarter. I don't think there's anything that's going to drive more sales this quarter. One thing that I am curious to see is, again, the memory prices. What does the memory prices, these types of cars need a nice amount of memory. What does that do with margins? Do they talk about some of the impacts there? So wonder if that's going to be a Q&A session, a part of the Q&A for Tesla. And one of the reasons I'm feeling more of a dump in the short term, right? In the long term, you do have the physical AI strength. But in the short term, at least for this earnings, I'm going to go with dump here.
Even just the commodity prices in general for their margins. I'm pretty sure Trueflation puts together a great EV commodity index. I wonder if there's going to be any commentary there. I don't really like. I think Elon's going to be in good spirits here. I don't think that a lot of his mood and his commentary during the calls is actually what's dictating the stock, in my opinion. And I think that he's going to be in good spirits. They've had a lot of milestones this quarter, even though I don't think sales are going to be that great in terms of their actual vehicles. The FSD breakthrough with no like unsupervised robotaxi, Optimus and their improvements there. I think that's actually what's going to lead the stock. And, you know, I wouldn't be too mad if I was a Tesla investor going into this. I'm not, by the way.
Neil, I think you've owned the stock
For a
very
while.
long time. Yeah. What are you thinking about this?
I mean, it's not like the stock is cheap, right? It's a stock that has gone up, and it has been the story like this for many years. Although before we did have more growth, way more growth than what we are having currently. Currently, it's $34 a share. What is it? Market cap? I don't know.
1.6, 1.3.
$1.36 trillion. So going into the earnings report, it's not like the bar is low. The bar is quite high, but again, it is based on Elon's timeline and expectations, robotaxi, cybercap, Optimus 3 event that should be, I don't know, in the next couple of months. So it's all based on what will happen in the future, whether it's on time or not. I mean, I've been following this company for a long time. It's not been on time many, many times. So we'll see. He will probably talk about Optimus. It's the best in the industry. Autonomous vehicles. We've collected billions of miles. Safety-wise, it's better than humans. We want it to be 10 times better than humans. The usual Elon script, the one that we hear every 3 months. Is that going to be enough? I don't know, because I'm pretty sure everybody can admit that the results are probably not going to be great for the quarter. And so we are now at a stage where, okay, autonomous vehicle rollout, huge fleets, when will that actually impact fundamentals? We don't know yet. Optimus, what does he say? He's going to sell Optimus to outside customers end of this year or end of next year? Probably end of next year. I'll give him end of next year. So that's also, I mean, it's almost 2 years from now. How much is that going to cost? What are the margins there? So we don't know. We don't know a lot of things. But it could be an exciting year if they deliver. And if not, then I don't think the stock should be at 1.3 trillion.
Almost all of these companies are high triple digits for the most part. Do you think that we're going to see anything unexpected, like a 10-to-1, 5-to-1 stock split that could get investors excited? Like especially on Meta?
I'm happy you brought that up. So I'm not in Microsoft. I own Meta and Tesla. I don't think Tesla's going to do a split. They've already done, I think, 2 or 3 splits before. Meta's never done a split. And although the split doesn't necessarily mean the stock's going to go higher. I mean, that stock at 670, but like if it was 120, it would be a little easier. You would have a lot more volume come in, more retail would have access. That could be the one thing that immediately gets the algos running up. We know there's going to be an earnings beat. I mean, like I'm trusting Zucks is going to beat on the top and the bottom. There's not going to be a tax issue. The call might be a different question, but for people that are thinking of an immediate algo run after earnings, a split alone with a good earnings, maybe that does it.
Yeah. Yeah. And even a 10-to-1 stock split on Meta, like you're looking at a $67 stock or something, like that's not impossible.
I mean, Netflix did it.
Yeah.
But their stock is down, but that's because of the Warner Brother acquisition. But no, a stock split usually, which is the craziest thing, I never really figured it out. It's like leading to the date of the split, the stocks, 90% of them go up, and then they go down like a week or 2 weeks afterwards. Like if you look at every stock that did the stock split, it's usually what happens, which is crazy. There's only one name that I really want to see a stock split. A 20-to-1 would be great, and that's Mercado Libre. Because that thing, every time I have to buy a share, is like $2,000 every single time. Like, come on. But yeah.
So someone just bought $6 million worth of calls in the option flow on Tessie. Strike is 450, relatively out of the money. March 20th expiration. So it's not a Friday expiration, but still some good money that's coming into bet. All right, we got 7 minutes until we get these earnings. We also have ServiceNow. We also have IBM.
A super important name, by the way, ServiceNow, because software has been getting so sold off, extreme pessimism just in that area. There's been some exciting stuff from Salesforce. So ServiceNow is also going to be, very much in the spotlight. I don't think we're going to listen to the call, but it's going to be important.
Yeah. So for those that are new to any of the channels, usually we stream these together at 4 p.m. We're going to close the markets and we're going to get whatever earnings we can get immediately. So if Meta's out, but Microsoft just came in, then we're going to read Microsoft. We're going to try to get to Meta as soon as possible and then get to all the other companies that are out there. Obviously, Meta, Microsoft, and Tesla have the top priority. And then we'll get to the others. We will be listening to Meta at 4:30. And from 4:30 to 5:30, that's Meta. And then 5:30 to 6:30, that's Tesla. Then we'll probably stay on for another 30 minutes and analyze it. So we'll be here for the next few hours. I don't know if everyone can stay, but whoever can stay will be here. And we'll see if we make a lot of money or lose a lot of money today. Are you guys excited? This is
the one of the most exciting days in terms of big tech. Someone said in my chat, it's capex day. We find out if people are spending, and like I said, Nvidia is my biggest name. It's going to be important, even if Meta goes down because they're spending too much. That's a good day for me. So I'll take the losses there if they say they're going to buy more AMD and Nvidia chips.
I just want to say the cool thing about this is, and I think a lot of people would agree, all of us could be doing something else right now. All the people that are here watching, we all care about our financial future. We all care about financial mobility. We all care about taking an active role in our destiny. Quite frankly, I think given the way the world is going, you have no choice but to care about things like the stock market if you're trying to increase financial flexibility. And I would say at least 90% of us are doing this for our families and to help support our families, give them a better life. So the fact that we're all even here, whether your portfolio is $1,000, $100,000, $1 million, the fact that you're interested in the markets, first of all, it means a lot for everyone being here and being part of the chat. And second of all, this is kind of what you have to care about to be able to get financially free. So excited that we're all here today.
It's what did you say? It's our quarterly Super Bowl, the earnings season.
Pretty much quarterly
Super Bowl.
All right,
5 more weeks of this.
We got 5 more weeks of this. All right, so let's do the final polls. I'll go first. I'll say Meta pump, Microsoft neutral, Tesla pump. Those are my 3 choices.
Sorry, what was your Microsoft thing?
I think Microsoft's flat. I want to say Microsoft pump, but then people say I'm a permable. But I can see Microsoft going neutral. Although Microsoft's been dead money for 8 months. Honestly, I really do think it'll pump.
Make a choice.
Screw it. We're saying pump. We're going pump on all 3. We're going pump on all 3. Elon's got to talk about Optimus. Meta's got to show they know what to do with their money. And then Microsoft, I just think, has to show some level of decent Azure growth, maybe 45%, and maybe that's enough. So I'm just going pump on all 3. Tanner, what do you got?
The only neutral one that's going to be in that list is Tesla, in my opinion. I think people are going to be disappointed by the numbers and the stock's not going to move an inch.
Fair. So
neutral on Tesla, bullish on Meta and Microsoft. It's Q4. It's going to be a lot of spend for Meta. That's my hope.
It is Q4, and that's always a big one. Neil, you're 3.
So I have poll results. I have a lot of people say all green, or which I think I go with that. Microsoft, Meta green, Tesla probably red.
Okay. Microsoft, Meta green, Tesla red. My chat, 58% said dump on Tesla as well. Microsoft getting a little pump right there. 3 minutes before the close. And then Jose, your final one.
Yeah, Meta pump, Tesla dump, and Microsoft neutral to baby pump.
So you're saying pump on all 3?
No, dump on Tesla.
Dump on Tesla. Okay. We got one person joining us at the last minute.
Oh.
So I'm on a crappy webcam right now.
Damn, your audio. Goodness. Oh my goodness. Every time, bro. Goodness gracious. You got to pull it back a little bit.
How about now?
It's still pretty high up there, but you have.
How about now?
That's better. That's better. Okay, we have 2 minutes. Pump, dump, Meta, Microsoft, Tesla. What do you got?
Okay, Tesla flat, Microsoft up, Meta flat.
Okay, so Microsoft, and do you own any of these 3?
I own Meta.
Are you doing any prediction markets? You putting any money? You gambling a little bit or no?
No, dude. Nope. None of
All right.
that. No gambling. No lottos, no hedging.
Does anyone have any short-term plays this earnings?
Yeah, put in the
today
chat.
specifically.
I don't think any of us did on the panel. I mean, I own Tesla and Meta, don't own Microsoft, but put in the chat if anyone's actually just playing the earnings on any of these three, or ServiceNow or IBM. And in about a minute, we get into big tech earnings. I see a lot of people saying Meta calls.
Jeez.
All right. People are playing it here. We will be ringing a bell in 30 seconds for those that are new to the channel to officially close it out. And then within a few minutes, we should be getting all of the earnings that we have today. The Federal Reserve did not cut rates in the United States. Big tech earnings are officially beginning today, and we are going to find out if the S&P 500 can really make a move as the largest companies in the world that comprise the S&P 500 report earnings today. Wednesday, January 28th, 4 p.m. Thank you, everybody, for being here. The stock market is now closed.
Extra long.
All right, now we wait. Now we wait. This is the list with all the earnings: Celestica, FICO, Southwest, Waste Management, Lam Research, ServiceNow, IBM, Tesla, Microsoft, Meta. Whichever charts move quickly or the first will get our attention. And I know all five of us are looking at our sources to try to get as much information as possible. And we will get these results as soon as we can right here.
Do you mean refreshing X constantly to see if anybody posted?
Yeah, pretty much. Pretty much. Pretty much. I also have my own personal source that I know he's on it, and he'll message me as soon as he sees anything. So once I get his message, if I don't see it first, then we should have
text him.
some.
I'm gonna text him. Make sure he texts me first.
Meta, we got a green candle.
The red
Let's
candle.
see how
for
green she can
Microsoft.
go. 685, 2%, 2.7.
Microsoft down, bro. 4% down.
Yeah, Meta just went down. Oh boy, that flipped so quick. Microsoft down 4, Meta down 2. Meta just went from up 4 to down 2. I don't trust Meta yet. Now Meta looks like it wants to go flat. Microsoft, ugly 4% down.
Damn, that one looks
Ew.
bad. Yeah.
Ugly 460, 5% down. Meta now flips green again. Meta's being a little agitated. She's flipping between red and green back and forth. Tesla also flat. IBM flat. ServiceNow up 1%. Lam Research flat. Meta and Microsoft, it looks like they want to dump.
Even Amazon's down 1.4%.
I'll put
Cloud.
Amazon on this list
Must
as
have been
well.
cloud.
It had to be cloud, right?
Microsoft, did you say the EPS and everything already?
No, you got it. Go for it.
EPS was $4.14, above expectations of $3.92, beat by 6%. Revenue was 81.2 billion, a beat by 1%. Expectations were 80.2, so beat by $1 billion. EPS was up 28% year over year, and revenue was up 17% year over year, down 6% in the markets right now.
Those are phenomenal numbers. Something has to be off with guidance. Meta ad revenue 58 billion versus 56.7. That's a beat. 59.8 billion total revenue versus 58.4. That's a beat. EPS 888 versus 802. That is a massive beat. Meta right here down 2%. It was down 5% at one point. Meta touched 644.
Dude, Microsoft down 7.5%.
What
That's
the
a
hell
lot.
did they
Are you
die?
guys buying? This must be a capex problem.
No,
What
It
the
doesn't.
hell did they say?
It doesn't matter. It doesn't. There is no guidance in the report.
Yeah.
Oh,
There's
yeah, I
only
forgot.
guidance
Yeah,
in the
they don't
code.
tell you until the call.
What the hell what happened? I'll try to get some details on that. Meta, massive double beat. Not sure what the street's upset
I think
about
this
on
is a capex thing. Nvidia's slightly up.
Yeah, this makes no. How is Nvidia? Amazon being down means cloud had to disappoint. Microsoft's
yeah,
second quarter Azure and other cloud revenue ex foreign exchange is 38% up year over year. The street estimated 38%. Oh wow, Meta capex 115 billion
Damn.
to
Nice.
135. They gave a range.
Let's
Damn.
freaking go.
That is
Why the hell
wild.
are they spending 140 billion dollars?
Because AI, Amit, that's all you need to know.
Yeah.
AI. Stop looking into it, okay?
Dog, what are they doing? I mean, I hope Zucks can explain. That's why Meta's down 3% right now. He can fix this on the call.
Man.
He can fix this on the call.
Yeah.
Jose, your take. Go ahead.
It's Meta needs it. I mean, they're gonna say their core business can grow still with this type of AI investment, but the street just hates it. It hates it. It hates that big number. But I mean, we saw them beat in revenue number. They gave a nice guidance. I saw the guidance already beat expectations. The reason is the AI infrastructure space is paying out. So why not just keep going if it keeps paying for them?
Okay, but
it's not being used on the metaverse. It's not being used like if you're thinking about using on Llama, their AI infrastructure, maybe 10% of that gets used for their AI labs. The other crazy amount gets used for their core business. That should just be drilled in everybody's head. The core business is what uses that AI infrastructure.
Well,
Bro, honestly, this is a phenomenal quarter by Meta. Have you guys been looking through these numbers?
No, go ahead. What are you seeing here?
It's crazy.
Members are up 7% year over year to 3.6 billion, essentially. Their ad impressions delivered across the family of apps increased by 18% year over year for the fourth quarter and 12% year over year for the full year of 2025. Average price per ad went up by 6% quarter over quarter. From fourth quarter to fourth quarter, and up 9% from the full year of 2025.
Tanner, I got to stop you real quick to do Tesla.
Yeah.
Tesla EPS 50 cents versus 45. That's a miss. Revenue 24.9 billion versus 24.7. That's a beat. And adjusted EPS again 50 cents versus 45. Tesla flat. Down 0.5%. Nothing.
I'm buying Meta and Amazon and Microsoft right now.
No, Amazon is the correct answer, of course.
Yeah, I mean, you're not wrong. I'm not anti that.
7% on Microsoft just feels like there's something going on. Let me get a little bit of coverage. It feels like a lot. Let's get a little bit of coverage on Meta. And then we'll keep going from there.
Versus estimates $8.23. Revenues of $59.89 billion, showing 24% revenue growth. That's actually an acceleration from the third quarter pace of growth. Analysts had been expecting it to dip slightly and coming in ahead of estimates of $58.59 billion. The key number here is capex. The company guiding to capex for the full year of 2026 in a range of $115 to $135 billion. That is ahead of estimates of about $110 billion. They say this year-over-year growth is driven by increased investment to support our Meta Superintelligence Labs efforts and our core business. And they said, despite the meaningful step up in infrastructure investment in 2026, we expect to deliver operating income that is above 2025 operating income. We're going to continue to dig into these numbers, and we'll be back to you with more, Melissa.
Okay, so capex.
This is Microsoft.
The bottom line, but we're still watching the stock drop about 6.5% here. Let me give you what we have so far. EPS is $4.14 adjusted. That's a beat over $3.97 expected. Revenue, another beat here, just by about $1 billion, $81.27 billion. Street wanted to see $80.27 billion instead. And then we got Azure Cloud growth. That was right in line at 39%. Now, there's a lot in here, Melissa, related to OpenAI, that recapitalization that happened in October, and some other accounting stuff that could be why we're seeing a drag on the stock. I'm going to dig into these numbers. There's going to be a lot more to share with you in a few minutes. So
Tesla flips green, and so does Meta. Again, Meta looked like they had a pretty damn good quarter. Tesla 4%, baby.
Tesla is going to acquire $2 billion of preferred stock in xAI.
Whoa!
Oh wow, a little late, but nice.
Yeah, a little late.
Yeah.
Oh
a little
my
late.
goodness!
Still cool.
There you go.
Hold on, that's a
That'll do
big deal. That's not a joke. So finally, Tesla shareholders own a piece of xAI, $2 billion at probably like 150 billion or 200 billion valuation, but still, and that's pretty damn aggressive. And I think it's what people have been waiting for. All right, Tesla numbers. Let me see if I can pull those up, and we'll get deeper into this as well. Okay, so let's pull up Tesla real quick. I'm sure the guys are going to be running through these Microsoft Meta numbers. We'll get some more analysis on that, but let's pull this up. 4.8 billion GAAP operating income in 2025, 1.5 billion in Q4. Here's the summary. 2025 marked a critical year for Tesla as we further expanded our mission and continued our transition from hardware-centric business to a physical AI company. We laid the foundation for the future of Tesla as we advanced FSD, launched our robotaxi service, began installing production lines for Cybercab, and fine-tuned our production-primed Optimus design. Our approach to AV and humanoid robots mirrors the way we approached EV and energy storage at the system level, where we identify the limiting factor and develop bespoke and scalable solutions to optimize for cost, functionality, efficiency, and safety. In 2025, we completed the refresh of our vehicle lineup with the launch of the new Model Y, including additional variants. We believe that maintaining an optimized and efficient product portfolio and a continued focus on high-value features such as long-range, best-in-class software and autonomy is the correct strategy to win. In 2026, we will further invest in the infrastructure needed to support clean energy, autonomous robots, including the ramp up of 6 new production lines across vehicles, robots, energy storage, and battery manufacturing, while further leveraging our existing factory, charging, and service center footprint to support future growth. Revenue is down 3% year over year. Autos are down 11% year over year. Energy is up 25% year over year. Services up 18% year over year. Gross profit is up 20% year over year. Operating margins are down 50 bips year over year. And then income from operations down about 11% year over year. Adjusted EBITDA is also down about 4% year over year. Neil, any quick reaction to Tesla numbers?
Wait, let me scroll through the presentation. But I mean, so far, better than expected, I would say. Plus that $2 billion XAI news is very welcome. Very late, but I guess better late than never. I do wonder how we'll get rewarded with the SpaceX IPO, but I guess we'll have to wait a couple of months to find out what happens with that.
Meta has gone green. Tanner, go ahead.
I was just going to say I bought the dips on Microsoft and Meta, and they're already turning green. So
Thank you, Tanner. I appreciate you.
Yeah, you're welcome. Yeah, it was mine. It was me.
Well, Meta wants 700. She's $4 away, baby. Ad impressions, 18%. Average price per ad, 9%. Revenue, almost 60 billion. Expenses, 35 billion. They bought back 26 billion of their stock. Again, it's hard to bet against these large caps. They're buying back so much of their stock. Long-term debt, 58 billion. That's because of data centers. Cash flows at 36 billion. Headcount, 78,000 people, up about 6% year over year. We expect first quarter revenue to be 53 to 56 billion, 698 on Meta. Expenses, 162 to 169, which obviously includes that massive capex spend. Tanner, any thoughts now that you've had a couple minutes to think about it of this increased capex?
I was never bearish. I like it. I think that it's so funny that the stock sold off so quickly on that news. It's like, why do you think he tweeted out this Meta compute thing? He was trying to, let people know there's going to continue to be an increase. So stop crying because it's only going to get worse. I've been saying this for a long time. Like the train's not done. A bunch of people saying that we're, all the infrastructure names. Jose is the only person that's understood. He's the only guy that understands what the chip happened. Okay. Bunch of more companies need to buy more chips. AI is real. This is not a fad. Meta understands this. Zuckerberg's 42. You want to bet against this guy for the next 30 years of him operating this business? No way, Jose.
Well, if anyone took the Meta earnings bullish view, you're up 4% right here. Just touch 700, 697. If Zucks can deliver a good call, I don't see why we can't break through 700 after hours and hold it. 697 right here on Meta. Jose, your reaction to the capex spend. Before you do that, ServiceNow, they beat by 6% on EPS, beat by 15% on revenue. That stock is flat after hours.
It was up 4% and just keeps on going everywhere.
Yeah, hit 140.
The market remembered it was a software name, so it's like, we can't get it.
Yeah. It's like, wait, hold on a second. Where are you going, baby?
Yeah, Jose.
But yeah, capex for Meta. I mean, not scary. Core business still does well with this. I wonder if, like Tanner mentioned, Microsoft could be selling off. If Meta is increasing, it's safe to assume at least the other players are going to increase. So I wonder if Microsoft is just having this scared off of the capex. Earnings comes, Microsoft is going to say, look, we're increasing our capex because we are compute constrained. That's it. It's easy. If we had more compute, we would be growing at larger revenue. So for Microsoft, I'm going to be paying attention how their RPO has increased, how their cloud business has increased, and kind of the commentary that they share there with the shortage. So I didn't do the Meta buy, but I'm here looking at Microsoft right now during this dip.
Let's get a little bit more coverage on Microsoft here.
Back in a jiffy with all of that, but right now we see the stock down 7% on these top and bottom lines.
All right.
Oh, that was the previous one. I'll get the new ones up. Neil, you're going through these Microsoft numbers. I mean, does anyone also in the chat, does anyone have a reason why, real quick, Robinhood is said to vie for key retail role in mega SpaceX IPO? Okay, good for Hood. I mean,
Gotta love Robinhood.
Is Hood up right now after hours on this? Yeah, Hood's up 2%. If they can get us the SpaceX IPO, get a big retail allocation, they'll be very bullish.
You'll get half a share, maybe.
No. I think this is, hopefully more.
Technically, I have, I think, half a share or a quarter of the fractional shares that they gave out when they announced something, their fractional token stuff in Europe a while ago. But from Meta, I mean, again, disregarding the spending for a bit, the core business is just firing on all cylinders. That's just insane. So if they feel they need to increase spending, well, I mean, why not? Why not? As for the Neo Cloud players, just looked at them. Most of them are, I mean, Applied Digital, Iron, Hut 8, Cypher, they're red. Nebius is flat. CoreWeave is up 0.5. Core Scientific is up 0.7. So not much of a movement there. As for Tesla, I see that they will maybe launch robotaxis in Dallas, Houston, Phoenix, Miami, Orlando, Tampa, and Las Vegas in the first half of 2026. So definitely ramping up the robotaxi coverage in 2026. As for Microsoft, I still, I don't know.
Neil, did you see the RPO number? Remaining performance obligations of $625 billion for Microsoft.
Yeah, but is it the same RPO as an Oracle where it's like maybe for the next 8 years backed by OpenAI that maybe doesn't have the money?
I hope not.
Because I remember last time, I mean, that would be massive because I think they had about 200 and something last quarter. I don't know why that massive growth, unless they have two different RPO numbers that they like to share. I think Neil mentioned something really interesting, that the Neo Clouds are actually down. And we know Meta is actually a big customer of Neo Cloud players. So shouldn't their capex increase also mean that they're going to go play with other Neo Clouds? I think Meta does both. They have a partnership with Nebius, and I think they have one with CoreWeave as well.
You're right.
If I remember correctly. So it's like capex growth. Doesn't this mean they're most likely going to be working on more deals with those players as well?
Yes.
Unless the street thinks, Tanner, you can say if you agree with this, the street thinks Meta is going to take Nebius's lunch, Iran's lunch. Do you think that's the argument here?
No, I don't think that. I just think there's so much compute to go around. Well, sorry, there's so much need for compute to go around that they're trying to essentially diversify, build their own data centers, work with CoreWeave. I think the deal is about a $12 billion deal with CoreWeave, $3 billion deal with Nebius. And by the way, the only reason why it was a $3 billion deal with Nebius is because Nebius had to essentially cut them off. They were like, we just can't continue to offer this much. Like, we just don't even have the supply.
That's already fulfilled too. So they fulfilled them with existing compute.
Right.
And they're already sold out.
Yeah.
Let's get a little more coverage on Microsoft. Maybe we can find out why this RPO is so high.
Is the same kind of RPO that when we talked about Oracle months ago that everyone was getting excited about. Microsoft now saying they're expecting a huge increase in that, likely OpenAI playing into that. CapEx for the quarter. Now, remember, they did not give us guidance on this. It ended up being $37.5 billion last quarter in capital expenditures. That's up 66% from the previous quarter. We just see Microsoft accelerating their spend on capital expenditures because we keep hearing again and again that they just don't have the infrastructure to meet the demand. Also, another highlight here, Microsoft commercial cloud revenue. They're crediting Copilot behind that growth, revenue up 17% there. So a lot of OpenAI stuff going on in here. Microsoft obviously has to disclose that because of their huge stake in the company. But that RPO number is something people are going to be paying attention to and talking about a lot in the call, Mel.
I think that's the biggest question today. Where the hell did they get $300 billion of RPO? It sounds like OpenAI, but hopefully it's more legit than not.
Because the other thing, they did announce a deal with Anthropic this past quarter, the Anthropic and NVIDIA deal. So that could be part of it. And we did see yesterday that Anthropic raised their fiscal year 2026 guidance by 20%. And then for and 2027 also looks strong. So I'm hoping we hear a little bit more about that diversification away from OpenAI.
IBM, 9% after hours. They're the winners right now. They beat by 5% on EPS. They beat by 2% on revenue. Not sure what they said to get the street this excited, but the street's excited. And then Celestica, earnings growth of 70% year over year, crushed EPS. Revenues up 44% year over year. That stock was one of the best performing stocks last year, but it's down 0.5% after hours.
And Microsoft is only down 4.4% right now. I remember there were quarters where the stock was down 5%, and then the earning call happened, and suddenly it flipped green. But yeah, I mean,
Correct.
the RPO is probably a mix of OpenAI, Anthropic as well, as Jose said, and maybe someone else. I don't know. Maybe Grok. Who knows?
So can I add one more ticker to your list for today's earnings?
Real quick before you do, OpenAI is building a social network and is looking to use Sam Altman's WorldCoin orbs for human verification. That ticker is up 22% after hours. Is this why SoftBank is giving them another $50 billion for a social network? Go ahead, Tanner.
Yeah, 30 billion. Yeah. Lending Club. This should be another name for the day. They just showed off earnings. It actually doesn't look bad. I'm only skimming the beginning. They increased guidance, revenue, and EPS all beat. Stock is down roughly 9.5%.
Why do you think they're down?
I'm not sure yet. I'm trying to go through. A lot of people compare this name to SoFi, but it truly, in the last probably 18 months, has not been correlated to SoFi at all. And in the same quarter, this company can put up terrible earnings, and SoFi can really show off great numbers. But I'm going to look into it for a second and see if I can find anything.
Reminds me of a lot of other companies out there. Snapchat versus Google and Meta.
Yeah. Imagine looking at
Rubrik.
Snapchat. You look at Snapchat and say that the advertising advertising business is down. It's like, it's not a great look.
Robinhood up after hours on this potential SpaceX allocation. Palantir right there up about 1% after hours. Again, Microsoft, which took the biggest hit. I think if Nadella clarifies that the RPO is not Fugazi and not just OpenAI, I think that stock could make a run back after hours. Now it's only down 4%. It was down 7%. Google should be pumping as well, right? Google 338, very close to 340 all-time highs. Amazon was down. Amazon still flat. And then NVIDIA seems to be the biggest beneficiary of all this capex.
Curious, I know Lam Research also reported. Are they moving anything today?
That's a good question.
And
No, not much.
Not much. Okay. And then there are discussions that Meta's going to buy some MI450s from AMD. Is AMD moving on the capex growth here for Meta?
AMD is up about 1%. Up about 1%. Here's what Microsoft said on the press release. We are only at the beginning phases of AI diffusion, and already Microsoft has built an AI business that is larger than some of our biggest franchises. We are pushing the frontier across our entire AI stack to drive new value for our customers and partners. Microsoft Cloud revenue crossed $50 billion this quarter, reflecting strong demand for our portfolio of services. We exceeded expectations across revenue, operating income, and earnings per share. I don't know why Microsoft's down. Like, I have zero clue why Microsoft's down. But looks like the streets.
It might recover on the earnings call. Similarly with Meta. Meta may be up right now, but things can switch as Zuckerberg begins the call. So
Good morning. Good afternoon.
Let's ask that question to everybody. Do we think Meta dumps on the call, or does Zuck pull it off? What do people think? What do you guys think?
Pulls it off.
Sam, what are you thinking?
I mean, if it was going to dump, it would have stayed dumping now. They don't really.
What if on the call he doesn't really? That's what happened last time, right?
No, they're going to ask him like what the capex is for, And as Jose said, if he says that it's for like renting out compute, I don't think shareholders are going to like that. I don't want him to do that. I don't want him to go out there and start renting out compute. I want it to be used solely for their core business and advertising. And look, it's up 5% now. So I think it's going to stay this way. Microsoft, I mean, yeah, the guidance is going to come out during the earnings. So like this.
Sam, I got a headline from Microsoft. I got a headline, by the way. Sipping Anejo, thank you for the $20 super chat. Great job on the earnings reporting team. I appreciate it. Thank you all for being here. 45% of commercial RPO is OpenAI.
Oh, well, there you go. That's why it's down.
That's why it's down. Of course, this is why the stock, I'd rather they had not given that type of RPO number versus say it's from OpenAI.
Yeah, but why? Like,
Because
why would you
OpenAI
rather it
hasn't
not
given
go up by 45%?
Because Brad Gerstner went on CNBC today and said Sam Altman was cajoling the market into thinking that they're going to spend all this capex, which basically means he was lying. And how the hell does anyone believe they're going to spend $300 billion with Oracle or Microsoft?
But I think with Microsoft, it's a little bit different, right? Because if OpenAI goes down, Microsoft doesn't, they keep all the research of it. So they can still run it on their co-pilots. They still will be able to see that kind of influx from that technology. So I feel like OpenAI on Microsoft is a little bit different than OpenAI on Oracle or all these other players, because at the end of the day, they own a lot of that research.
I agree with that. I think it's way different for Microsoft versus Oracle. And I don't think this is a bearish thing for Microsoft. It's just, it explains why the stock is down now.
Yeah.
Meta 701.27.
It's halfway through the last earnings gap down. So last time we were at 760, it dropped, and now we're at 700. So almost halfway there, which I think, again, the call, like Sam said, it doesn't really matter that much, because the results are just too good for them not to continue to spend like they've just reported. I mean, clearly it's working, so why not?
I'm a pretty happy Meta shareholder seeing this pass above 700. Like, we've been waiting for this for literally 5 months since October, 4 months. I mean, it's been a while. This thing has been in the dumps. Let's get a little bit more coverage. So if we can hold 700 on the call, I'd be happy.
Loss of $6.02 billion on $955 million in sales. That is a bigger loss than anticipated. And I want to flag a disclosure that Meta made after the trial against Meta and YouTube started in Los Angeles yesterday. The company is saying, quote, "We continue to monitor legal and regulatory headwinds in the EU and the US." Going on to say, "We continue to see scrutiny on youth-related issues and have a number of trials scheduled for this year in the US, which may ultimately result in a material loss." Melissa, back over to you.
All right.
So same stuff on Reality Labs. ServiceNow, let's get some quick coverage on that. Looks like they had a pretty good quarter. Stock's not reacting too much to that after the bell.
I'll have more from him in just a moment. The stock initially popped when the results came out. Now it's lower, but let me tell you, it's beat on the top and bottom lines, also raised guidance. Q4 revenue, $3.57 billion versus $3.53 expected. EPS, 92 cents versus 88 on the guide. ServiceNow saying subscription revenue will be $3.65 billion to $3.66, well above the $3.58 billion consensus. Now, McDermott told me, and he's on the warpath with his numbers, pointing to ServiceNow's pipeline growth of 25% in Q4. That's those remaining performance obligations, 21% in constant currency. He's also pointing to ServiceNow's AI growth, with Now Assist annual contract value more than doubling year over year in the quarter. So McDermott is making the argument to me and to investors here with these results that, hey, I know that there's a narrative that AI is eating software. He says, not us, not ServiceNow. He gave me a lot more details that he's going to share on the call. As
same argument around software, right? I mean, looks like a pretty damn good quarter, just kind of stuck in that overall narrative.
Why is Palantir down 5%?
After hours or today?
No, today, just the whole day.
Well, why is ServiceNow down 6%? I really do think these SaaS.
Yeah, no, you're right. The software names are just getting wrecked.
Absolutely getting wrecked right here. Julian, thank you for the super chat, man. Appreciate it. Did a meta swing. Thanks for the coverage. Hopefully that Meta swing was very profitable for you. I mean, for those that took a swing on Meta, 670 right before the bell, 706 right now. I mean, a 5% move, especially with options or if you went heavy with shares, is a big amount. So congrats to everyone.
I hope those weren't. If they're call options, you better hope it sticks because he already tipped you.
Well, yeah,
It's
hopefully
500 AED to US.
Well, that's what I'm saying. Zuck's just like, this was a silver
Oh, wow.
platter earnings for Zuck's. He just has to finish off the call. That's it.
Also, let's give a little pat on to the back to the people who bought the dip after the earnings bell or after. Okay, I'm going to take this lap.
Wait, hold on. What you got at 640? Like how low did you get?
644.
You actually got 644?
Yeah. And Microsoft.
Impressive. That's impressive.
Microsoft here. I'll tell you my Microsoft price as well. Microsoft, I'm not up as much because it's still down.
I have a general question for you all. How are we feeling about the current market, the state of the market? All-time highs for the market, but for many stocks, far from it. Many
449
cheap
on
stocks.
Microsoft.
Not bad.
We're breaking out of the range with Qs. So
Well, the Qs are getting back to their October levels. I think the broader market's okay, Neil. I don't think there's any recessionary fears yet. The geopolitical stuff, I mean, that stuff seems to not be the biggest issue. The whole Greenland thing that was resolved. And then if these tech companies, I mean, regardless of the stock prices, if they can keep putting up these earnings, I mean, at the end of the day, the market is a reflection of earnings. So I don't think it's crazy frothy. I don't think Meta at 20 times forward earnings, 22 times earnings, Nvidia at 25 times earnings forward. That's not euphoric to me.
I know we've talked about it, but it still shocks me. This past year, Meta did 70 something billion in capex. They're saying they're going to do 115 in 2026. So they increased capex by about 50% in 1 year. How, if a company that's just doing ads needs this much compute, how much compute do you think a company like Amazon, like Microsoft, like Google Cloud, that are using it for so many different things are going to need? I think that, oh my God.
What Jose is trying to say is, why isn't Nvidia $250 by now? I think that's what you're trying to say.
It's so early in the AI market. I'm super excited for this. This is insane.
I'm not saying Nvidia gets past 250 this year, but it's going to get past 250 this year. Okay. It's just like he said, the big banks are going to need, and investment banks are going to need compute to help with, high frequency trading and AI bots that are buying and selling stocks. Like it's going to fill in every gap. I know that sounds toppy and I'm going to get a bunch of concerns on this, but like for real, we haven't seen a slowdown in any of the cloud compute names. And Nebius and CoreWeave and Azure, AWS, Google Cloud, these are all going to be really, really exciting names, at least for the next, 5+ years.
And we
I
might
think the Meta call starting.
Yeah, I'm pulling it up. We also might see a rotation out of some of these small caps into the large caps. And so that could be really good with these tech earnings. All right, let me pull up the call. Give me 1 second. And we are going to get started.
The next Fed chair is going to be Grok. I mean, maybe one day.
Put a bikini on that.
Microsoft starting to sell off
Our
again.
results are Mark Zuckerberg, CEO, and Susan Li, CFO. Our remarks today will include forward-looking statements, which are based on assumptions as of today. Actual results may differ materially as a result of various factors, including those set forth in today's earnings press release and in our quarterly report on Form 10-Q filed with the SEC. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The earnings press release and an accompanying investor presentation are available on our website at investor.atmeta.com. And now I'd like to turn the call over to Mark.
All right. Hey, everyone. Thanks for joining us. We ended 2025 strong with more than 3.5 billion people now using at least one of our apps every day. That includes more than 2 billion daily actives each on Facebook and WhatsApp, and just shy of that on Instagram. Our business also performed very well thanks to record-breaking holiday demand and AI-driven performance gains. We are now seeing a major AI acceleration. I expect 2026 to be a year where this wave accelerates even further on several fronts. We're starting to see agents really work. This will unlock the ability to build completely new products and transform how we work. In 25, we rebuilt the foundations of our AI program. Over the coming months, we're going to start shipping our new models and products. I expect our first models will be good, but more importantly, will show the rapid trajectory that we're on. And then I expect us to steadily push the frontier over the course of the year as we continue to release new models. I'm very excited about the products that we're building. Our vision is building personal superintelligence. We're starting to see the promise of AI that understands our personal context, including our history, our interests, our content, and our relationships. A lot of what makes agents valuable is the unique context that they can see. And we believe that Meta will be able to provide a uniquely personal experience. We're also working on merging LLMs with the recommendation systems that power Facebook, Instagram, Threads, and our ad system. Our world-class recommendation systems are already driving meaningful growth across our apps and ads business, but we think that the current systems are primitive compared to what will be possible soon. Today, our systems help people stay in touch with friends, understand the world, and find interesting and entertaining content. But soon, we'll be able to understand people's unique personal goals and tailor feeds to show each person content that helps them improve their lives in the ways that they want. This also has implications for commerce. Our ads today help businesses find just the right, very specific people who are interested in their products. New agentic shopping tools will allow people to find just the right, very specific set of products from the businesses in our catalog. We're focused on making these experiences work across both our feeds and across business messaging, significantly increasing the capabilities of WhatsApp over time. New kinds of content will soon be possible as well. People want to express themselves and experience the world in the most immersive and interactive way as possible. We started with text, and then moved to photos when we got phones with cameras, and then moved to video when mobile networks got fast enough. Soon, we'll see an explosion of new media formats that are more immersive and interactive, and only possible because of advances in AI. Our feeds will become more interactive overall. Today, our apps feel like algorithms that recommend content. Soon, you'll open our apps and you'll have an AI that understands you and also happens to be able to show you great content or even generate great personalized content for you. Glasses are the ultimate incarnation of this vision. They're going to be able to see what you see, hear what you hear, talk to you and help you as you go about your day, and even show you information or generate custom UI right there in your vision. Sales of our glasses more than tripled last year, and we think that they're some of the fastest growing consumer electronics in history. Billions of people wear glasses or contacts for vision correction, and I think that we're at a moment similar to when smartphones arrived, and it was clearly only a matter of time until all those flip phones became smartphones. It's hard to imagine a world in several years where most glasses that people wear aren't AI glasses. For Reality Labs, we are directing most of our investment towards glasses and wearables going forward, while focusing on making Horizon a massive success on mobile and making VR a profitable ecosystem over the coming years. I expect Reality Labs losses this year to be similar to last year, and this will likely be the peak as we start to gradually reduce our losses going forward while continuing to execute on our vision. As we plan for the future, we will continue to invest very significantly in infrastructure to train leading models and deliver personal superintelligence to billions of people and businesses around the world. I recently announced Meta Compute with the belief that being the most efficient at how we engineer, invest, and partner to build our infrastructure will become a strategic advantage. Dina Powell-McCormick also joined us as president and vice chairman, and she will lead our efforts to partner with governments, sovereigns, and strategic capital partners to expand our long-term capacity, including ensuring positive economic impact in the communities that we operate in around the world. An important part of Meta Compute will be making long-term investments in silicon and energy. We will continue working with key partners while advancing our own silicon program. We're architecting our systems that we can be flexible in the systems that we use, and we expect the cost per gigawatt to decrease significantly over time through optimizing both our technology and supply chain. The last thing that I want to mention is that I think that 2026 is going to be the year that AI starts to dramatically change the way that we work. As we navigate this, our North Star is building the best place for individuals to make a massive impact. So to do this, we're investing in AI native tooling so individuals at Meta can get more done. We're elevating individual contributors and flattening teams. We're starting to see projects that used to require big teams now be accomplished by a single very talented person. I want to make sure that as many of these very talented people as possible choose Meta as the place that they can make the greatest impact, to deliver personalized products to billions of people around the world. And if we do this, then I think that we're going to get a lot more done, and I think it's going to be a lot more fun. All right, that's everything I wanted to cover. This is going to be a big year for delivering personal superintelligence, accelerating our business, building infrastructure for the future, and shaping how our company will work going forward. As always, I am grateful for all of the hard work of our teams and to all of you for being on this journey with us. And now here's Susan.
Thanks, Mark, and good afternoon, everyone. Let's begin with our segment results. All comparisons are on a year-over-year basis unless otherwise noted. Our community across the family of apps continues to grow, and we estimate more than 3.5 billion people used at least one of our family of apps on a daily basis in December. Q4 total family of apps revenue was $58.9 billion, up 25% year over year. Q4 family of apps ad revenue was $58.1 billion, up 24%, or 23% on a constant currency basis. In Q4, the total number of ad impressions served across our services increased 18%. Impression growth was healthy across all regions, driven primarily by engagement and user growth, and to a lesser degree, ad load optimizations. The average price per ad increased 6% year over year, benefiting from increased advertiser demand, largely driven by improved ad performance. Family of apps other revenue was $801 million, up 54%, driven by WhatsApp paid messaging revenue growth, as well as Meta verified subscriptions. Within our Reality Labs segment, Q4 revenue was $955 million, down 12% year over year. As we noted on the last call, the year-over-year decline in Reality Labs revenue is due to us lapping the introduction of Quest 3S in Q4 of 2024, as well as retail partners procuring Quest headsets during the third quarter of 2025 to prepare for the holiday season, which was recorded as revenue in Q3. Moving now to our consolidated results. Q4 total revenue was $59.9 billion, up 24%, or 23% on a constant currency basis. Q4 total expenses were $35.1 billion, up 40% compared to last year. Year-over-year growth was driven primarily by employee compensation expenses, legal expenses, and infrastructure costs. Growth in employee compensation expenses reflects the technical hires we've added this year, particularly AI talent. Legal expense growth was due to both lapping legal accrual reversals in Q4 of 24 and charges recorded in Q4 25. Infrastructure expense growth was driven by higher depreciation, cloud spend, and other operating expenses. We ended Q4 with over 78,800 employees, up 6% year over year, driven by hiring in priority areas of monetization, infrastructure, Meta Superintelligence Labs, as well as regulation and compliance. Fourth quarter operating income was $24.7 billion, representing a 41% operating margin. Q4 interest and other income was $609 million, driven primarily by unrealized gains on our equity investments. Our tax rate for the quarter was 10%, slightly lower than our outlook of 12 to 15% due to the settlement of matters with tax authorities. Net income was $22.8 billion, or $8.88 per share. Capital expenditures, including principal payments on finance leases, were $22.1 billion, driven by investments in data centers, servers, and network infrastructure. Free cash flow was $14.1 billion. we ended the quarter with $81.6 billion in cash and marketable securities and $58.7 billion in debt. Turning now to the business performance. There are two primary factors that drive our revenue performance: our ability to deliver engaging experiences for our community and our effectiveness at monetizing that engagement over time. On the first, we're continuing to drive incremental engagement from ranking and product improvements. Instagram Reels had another strong quarter, with watch time up more than 30% year over year in the US. Engagement is benefiting.
That's not me. That is not me. That's them.
Not enough compute.
I think Meta just
Had an
destroyed
extra
the whole
10
world.
billion in the
On
cafe.
Facebook, video time continued to grow double digits year over year in the US. And we're seeing strong results from our ranking and product efforts on both feed and video surfaces. The optimizations we made in Q4 drove a 7% lift in views of organic feed and video posts on Facebook, resulting in the largest quarterly revenue impact from Facebook product launches in the past 2 years. We're continuing to increase the freshness and originality of content recommendations as well. On Facebook, our systems are surfacing over 25% more Reels published that day than the prior quarter. On Instagram, we grew the prevalence of original content in the US by 10 percentage points in Q4, with 75% of recommendations now coming from original posts. Threads is also seeing strong momentum, again benefiting from recommendation improvements. The optimizations we made in Q4 drove a 20% lift in Threads time spent. Turning to 2026, we see a lot of opportunity to drive additional gains. This includes scaling the complexity and amount of training data we use in our models while continuing to make our systems more responsive to people's real-time interests. We're also focused on incorporating LLMs to understand content more deeply across our platform, which will enable more personalized recommendations. Another big area of investment this year is developing the next generation of our recommendation systems. We have several big bets on this front, including building new model architectures from the ground up that will work on top of LLMs, leveraging the world knowledge and reasoning capabilities of an LLM to better infer people's interests. Beyond improvements
It's not me.
to our recommendation systems, we expect to use the models developed by Meta Superintelligence Labs to deliver compelling and differentiated AI products. One area we're already seeing promise is with AI dubbing of videos into local languages. We are now supporting 9 different languages with hundreds of millions of people watching AI translated videos every day. This is already driving incremental time spent on Instagram, and we plan to launch support for more languages over the course of this year. We are also seeing strong traction with our media creation tools. Nearly 10% of the Reels people view each day are now created in our Edits app, almost tripling from last quarter. Within Meta AI, the number of daily actives generating media tripled year over year in Q4. This year, we expect to advance the capabilities of our underlying media generation models and ship new features to further enhance the product experience. Another area we're focused on for Meta AI is personalization. We're seeing in our early testing that personalized responses drive higher levels of engagement, and we expect to significantly advance the personalization of Meta AI this year. This dovetails with our investments in content understanding, which will enable our systems to develop a deeper understanding of each person's interests and preferences, while also identifying the most relevant content across our platform to pull into responses. Turning to the second driver of our revenue performance, increasing monetization efficiency. The first part of this work is optimizing the level of ads within organic engagement. Here, our focus remains on tuning our systems to identify the right time and place to deliver ads. In some cases, this enables us to grow the overall level of ad load while preserving the user experience. However, an increasingly important part of this work is finding opportunities to drive incremental conversions within the same overall level of ad load by determining when a person is more interested in seeing an ad. In fact, in the second half of 2025, Our initiatives on Facebook to redistribute ads across users and sessions delivered a nearly 4 times larger revenue impact than Facebook ad load increases. We also continue to make progress on bringing ads to our newer services. Within Threads, we're beginning to expand ads to all remaining countries this month, including the UK, European Union, and Brazil. On WhatsApp, we expect to complete the rollout of ads and status throughout the year, with the level of ads remaining low in the near term while we follow our standard approach of optimizing ad formats and performance before ramping inventory. Moving to the second part of increasing monetization efficiency, improving performance for the businesses who use our tools. We're seeing very strong results from the ad performance investments we made throughout 2025, with year-over-year conversion growth accelerating through the fourth quarter. We expect the set of investments we're making in 2026 will enable us to drive further gains as we continue to integrate AI across all layers of the marketing and customer engagement funnel. The first area is our ad system, where we're continuing to scale the complexity and size of our models to better select which ads to show. In Q4, we doubled the number of GPUs we use to train our GEM model for ads ranking. We also adopted a new sequence learning model architecture, which is capable of using longer sequences of user behavior and processing much richer information about each piece of content. The GEM and sequence learning improvements together drove a 3.5% lift in ad clicks on Facebook and a more than 1% gain in conversions on Instagram in Q4. This new sequence learning.
It's not me, guys. It really is them. But this stock's pumping, so
Architecture is significantly more efficient than our prior architectures, which should enable us to further scale up the data, complexity, and compute we use in our future ranking models to deliver performance gains. As we scale up our foundational ads models like GEM, we are also developing more advanced models to use downstream of them at runtime for ads inference. In Q4, we launched a new runtime model across Instagram feed, stories, and reels, resulting in a 3% increase in conversion rates in Q4. We continue to progress on our model unification efforts under Lattice as well. After seeing strong success with the consolidation of Facebook feed and video models in the first half of 2025, in Q4, we consolidated models for Facebook stories and other surfaces into the overall Facebook model. This, along with a series of backend improvements, drove a 12% increase in ads quality. And in 2026, we expect to consolidate more models than we had in the prior 2 years as we continue to evolve our systems towards running a smaller number of highly capable models. Moving to the next area, ads products. We continue investing in ways to help businesses leverage AI to reduce the friction of setting up and optimizing an ad campaign. In Q4, we started testing our Meta AI business assistant with advertisers, which helps with tasks like campaign optimization and account support. In the coming months, we'll make it available to more advertisers so each business has an AI assistant they can chat with that remembers their business's goals and provides personalized recommendations on how to improve performance. Another area we're deploying AI to improve performance is ad creative. The combined revenue run rate of video generation tools hit $10 billion in Q4, with quarter-over-quarter growth outpacing the increase in overall ads revenue by nearly 3 times. We are also seeing very good results from our incremental attribution feature, which optimizes for incremental conversions in real time. Our latest model rollout in Q4 is driving a 24% increase in incremental conversions versus our standard attribution model, and this product has already achieved a multi-billion-dollar annual run rate just 7 months since launching. The last area of our monetization work I'll cover is business messaging, where we're seeing strong momentum across our portfolio of solutions. Click-to-message ads revenue growth accelerated in Q4, with the US up more than 50% year over year, driven by strong adoption of our website-to-message ads, which direct people to a business's website for more information before choosing to launch a chat. Paid messaging within WhatsApp continues to scale as well, crossing a $2 billion annual run rate in Q4. Finally, we're seeing good early traction with our business AIs in Mexico and the Philippines, with over 1 million weekly conversations between people and business AIs now happening on our messaging platforms. This year, we will expand availability of our business AIs to more markets, while also extending their capabilities so they not only answer questions on topics like product availability, but can help people get things done right within WhatsApp. We speak a lot about how AI is improving our products, but I'd like to take a moment to give an update on how it's changing the way we work. Mark mentioned our focus on making Meta a place where individuals can have significant impact. A big focus of this is to enable the adoption and advancement of our AI coding tools, where we're seeing strong momentum. Since the beginning of 2025, we've seen a 30% increase in output per engineer, with the majority of that growth coming from the adoption of agentic coding, which saw a big jump in Q4. We're seeing even stronger gains with power users of AI coding tools, whose output has increased 80% year over year. We expect this growth to accelerate through the next half. Next, I would like to discuss our approach to capital allocation. We have significant opportunities to improve our core business in 2026. We plan to continue to prioritize investing in the business to support these opportunities, while also positioning us for an entirely new and exciting product cycle over the coming years, powered by our AI models. Procuring sufficient infrastructure capacity is central to these initiatives, and we're working to meet our silicon needs by deploying a variety of chips that optimally support each of our different workloads. To that end, in Q4, we extended our Andromeda ads retrieval engine so it can now run on NVIDIA, AMD, and MTIA. This, along with model innovations, enabled us to nearly triple Andromeda's compute efficiency. In Q1, we will extend our MTIA program to support our core ranking and recommendation training workloads, in addition to the inference workloads it currently runs. More broadly, as we invest in infrastructure to meet our business needs, we continue to prioritize maintaining long-term flexibility so we can adapt to how the market develops. We're doing so in several ways, including changing how we develop data center sites, establishing strategic partnerships, contracting cloud capacity, and establishing new ownership structures for some of our large data center sites. We have a strong net cash balance and expect our business will continue to generate sufficient cash to fund our infrastructure investments in 2026, which is reflected in our expectations. Nonetheless, we will continue to look for opportunities to periodically supplement our strong operating cash flow with prudent amounts of cost-efficient external financing, which may lead us to eventually maintain a positive net debt balance. Moving to our financial outlook, we expect our first quarter 2026 total revenue to be in the range of $53.5 to $56.5 billion. Our guidance assumes foreign currency is an approximately 4% tailwind to year-over-year total revenue growth based on current exchange rates. Turning to the expense and capex outlooks, we expect full year 2026 total expenses to be in the range of $162 to $169 billion. The majority of expense growth will be driven by infrastructure costs, which includes third-party cloud spend, higher depreciation, and higher infrastructure operating expenses. The second largest contributor to total expense growth is employee compensation driven by investments in technical talent. This includes 2026 hires to support our priority areas, particularly AI, as well as a full year of expenses from 2025 hires. At a segment level, we expect expense growth to be driven by the family of apps, with Reality Labs operating losses remaining similar to 2025 levels. We anticipate 2026 capital expenditures, including principal payments on finance leases, to be in the range of $115 to $135 billion, with year-over-year growth driven by increased investment to support our Meta Superintelligence Labs efforts and core business. Despite the meaningful step up in infrastructure investment, in 2026, we expect to deliver operating income that is above 2025 operating income. Absent any changes to our tax landscape, we expect our full year 2026 tax rate to be 13 to 16%. Finally, we recently aligned with the European Commission on further changes to our less personalized ads offering, which we will begin rolling out this quarter. However, we continue to monitor legal and regulatory headwinds in the EU and the US that could significantly impact our business and financial results. For example, we continue to see scrutiny on youth-related issues and have a number of trials scheduled for this year in the US, which may ultimately result in a material loss. In closing, 2025 was another strong year for our company. The investments we've made to improve our business are continuing to drive strong growth, and we have an exciting roadmap this year to deliver new experiences and services for our global community. As always, thank you to our teams for their hard work and commitment to our mission. With that, Krista, let's open up the call for questions.
All right, Q&A.
Thank you. We will now open the lines for a question and answer session. To ask a question, please press star 1 on your touch-tone phone. To withdraw your question, again, press star 1. Please limit yourself to one question. Please pick up your handset before asking your question to ensure clarity. If you are streaming today's call, please mute your computer speakers. And your first question comes from the line of Brian Nowak with Morgan Stanley. Please go ahead.
Thanks for taking my questions. I have one for Mark, one for Susan. Mark, one is a long-term question. As you think about ramping all this investment and the personal intelligence opportunity, the meta compute opportunity, can you walk us through a little bit how you think about the largest revenue or ROIC long-term opportunities you're trying to unlock with those over the next, call it 3, 5, 10 years through all the investment? And then Susan, a little more near term, more like 26. I think the guide is the fastest growth you've had in almost 5 years. I know you have a lot of improvements on recommendations and monetization efficiency, but can you just sort of help us a little bit understand 2 or 3 of the biggest drivers of this inflection you're seeing on revenue in 26?
Yeah, I guess I can start with the first one. Although I have to say up front that I think my answers to a lot of your questions on this particular call may be somewhat unfulfilling, because we're in this interesting period where we've been rebuilding our AI effort, and we're 6 months into that, and I'm happy with how it's going. But we are going to be rolling out our initial set of models and products and businesses around that over the coming months, and I will have a lot more to share on all of those fronts at that point. So I'm happy to offer kind of a high-level view of some of the stuff, but I apologize in advance that not much of this is going to be particularly detailed, but it will be exciting as we roll it out. I think the theme on the business, I mean, this is I don't think I'm going to break any new ground here, but there are several major business opportunities that we're focused on. I think that one is just going to be improving the core products and accelerating the current business. I talked about that in terms of the connecting of the recommendation systems and the LLMs, which I think will both improve the quality of the organic experience and of advertising. We're going to see the generation of media improve the quality of content, which, coupled with the improvements in the recommendation systems, we expect to generally accelerate the quality and effectiveness of the core business, both for people who use it organically and for businesses. So I think that will have a compounding effect. And then there's going to be many, I think, new business opportunities that come up. I mean, we have been working on Meta AI for a while. I think you're starting to see some of the way that products like that get monetized across the industry. When we get that to a scale and depth that we want, we think that there are going to be opportunities both in terms of subscriptions and advertising and all of the different things that you see on that. I mean, yeah, I think there's a number of things on shopping and commerce that I'm quite excited about that I alluded to in the comments up front. And as the models launch and we demonstrate some of the capabilities, both in the first set of models and over the year, I think the models are going to get a lot better too. We'll be able to have different products paired with those that I think will facilitate different businesses for businesses who use us and our platforms, as well as direct consumer businesses. I guess it's probably also worth flagging, because I don't think either of us mentioned the Manus acquisition in the upfront comments. I think that is going to is a good example of you have significant number of businesses that already pay a subscription to basically use their tool to accelerate their business results, and integrating that kind of thing into our ads and business manager, so that way we can just offer more integrated solutions for the many millions of businesses that use and rely on our platforms, is going to be really powerful, both for accelerating their results using the existing products that we have, and I think adding new lines as well. So a somewhat high level answer, and I think the picture will become clearer, and I think more exciting if we do our jobs well over the course of the year.
Brian, on your second question, there's obviously a range of outcomes captured in the Q1 26 revenue outlook. It overall reflects our expectation for a strong quarter of growth. The range embeds an outlook for accelerated growth, and that's really underpinned by the strong demand that we saw through the end of Q4 and continuing into the start of 2026. Now, I will say we also expect foreign currency to be a 4-point benefit to year-over-year growth. So that is a 3-point larger tailwind than it was in Q4 25 as we lap the strengthening of the US dollar a year ago. But overall, we see that advertisers are responding to ad performance improvements that we made. They're driving strong conversion growth. We've made a lot of these investments over the course of 2025, including advances to our ads ranking and delivery systems, the more effective redistribution of ad load, new features and ad products like Advantage Plus, better measurement, and just a lot of great work that has helped to drive the continued performance of our ads.
Your next question comes from the line of Eric Sheridan with Goldman Sachs. Please go ahead.
Thanks so much for taking the question. Maybe two, if I could. In prior periods, you've talked about being capacity constrained internally and not having enough compute to sort of achieve the goals you have on a platform and a product standpoint. I want to know if we get any update on currently how you think about your own internal needs for compute against that roadmap. And the second part of the question would be, as we continue to see the ads business sort of scale, especially in terms of dollar growth year on year, have we yet seen the full first order effects of scaling the business against applying more compute to it? Or how should investors think about the directional relationship between applying more compute and rate of change in terms of outcomes on the monetization side? Thank you.
On your first question, we do continue to be capacity constrained. Our teams have done a great job ramping up our infrastructure through the course of 2025, but demands for compute resources across the company have increased even faster than our supply. So we expect over the course of 2026 to have significantly more capacity this year as we add cloud. But we'll likely still be constrained through much of 2026 until additional capacity from our own facilities comes online later in the year. With that said, I think, we have done a good job internally mitigating the impact of compute constraints on our business. I expect that will continue to be the case in 2026. We're continuing to focus on increasing our infrastructure efficiency in several ways, including by optimizing workloads, improving infrastructure utilization, diversifying our chip supply, and just investing in efficiency improvements as part of our core technology development efforts in areas like content and ads ranking. So that was your first question. The second question about how the ads business scales. I think I don't have an extremely precise answer to this question. What I'd say is, one of the ways that we are working to drive ads performance improvements is by improving our larger scale models, along with our lighter weight ones that we use for ads inference at runtime. We don't typically use our larger model architectures like GEM for inference because their size and complexity would make it too cost prohibitive. So the way that we drive performance from those models is by using them to transfer knowledge to smaller lightweight models used at runtime. But I would say that we think that there is room for our larger models to benefit from having more compute. And I think as we scale up the compute available to those models and the foundational models in different areas that power the different stages of ads ranking and recommendation, we expect that we will see gains coming from that.
Your next question comes from the line of Mark Shmulik with Bernstein. Please go ahead.
Yes, thanks for taking the questions too, if I may. Mark, kind of with your comments that you kind of expect to see some meaningful changes in how work and things are done this year, I guess, would you be surprised if kind of by the end of the year, we've yet to see meaningful progress and adoption on some of the newer products and initiatives that you're launching? Or, should we just be a bit more patient on the timeline here? And then Susan, kind of with the guidance provided on OI still expected to grow kind of faster this year than last year, let's say in a few months we realize we need more investment and resources to continue to go after the AI opportunity, but perhaps macro might be a bit weaker. How hard of a line is there in terms of the tie of investment levels to core performance? Thank you.
I think the first question was asking about kind of when do I expect the product impact to be? I mean, we're going to roll out new products over the course of the year. I think the important thing is we're not just launching one thing, and we're building a lot of things. I think AI is going to enable a lot of new experiences. I outlined thematically a bunch of these in the upfront comments around, a personal AI, around LLMs combining with the recommendation systems. I think that's a somewhat longer term research project that I think will yield dividends over a long period of time, but we're already definitely seeing optimizations of the recommendation systems as we're including more of the AI research improvements and advances into that. The content is going to improve. There are going to be new formats. There are going to be improvements on the glasses. There are all these different things, as well as several things that we think are new that we're going to try that are not just extensions of the current things that we're doing. So, yeah, I mean, I would expect that we'll roll these out over the course of the year, and that sometimes it takes a few iterations for things to really hit and reach the kind of product market fit that you need. But I think we have enough time, hopefully, to we're starting off early enough in the year that I would expect that we'll see some successes by the end of the year on this, as well as on the work side. What we were talking about is I think it's very hard for anyone exactly to predict what the shape of how organizations working is going to feel, but I just think the fact that agents are really starting to work now is quite profound, and I think is going to allow. We're already starting to see the people who adopt them are just being significantly more productive, and there's a big delta between the people who do it and do it well, and the people who don't, and I think that's going to just be a very profound dynamic for I think across the whole sector and probably the whole economy going forward in terms of the productivity and efficiency with which we can run these companies, which I think, my hope is that we can use that to just get a lot more done than we were able to before. And I'm most focused on making sure that Meta is a great company to have a big impact, right? You'll be able to use these kind of agentic tools anywhere, but you will only be able to come and ship things to billions of people if you join a company like Meta, and there aren't that many companies like Meta. So, so I think if we make it so that so that we can harness these kind of tools, then I think that we should, over some period of time, start to see a real acceleration in the amount of output that we could have. Now, how to predict exactly the time frame for adopting that, somewhat hard, right? I'm not going to predict a specific quarter or something like that, but the trend seems like unmistakably like this.
Blame Amit.
On your second question, I want to make sure and clarify something. So I think in the question, you had said that operating income growth in 26 would be higher than 25. And I want to make sure my comments were super clear. In 2026, we expect to deliver operating income above 2025 operating income. So this is comparing absolute dollars, not year-over-year growth. So to give some context on that, we are going into 2026 with strong revenue growth at the start. Of course, we are just a few weeks in, set against, a healthy macro backdrop. So obviously hard to extrapolate the current trends to the full year. And, there are many, many moving variables in the current landscape. We're really taking advantage of the current business strength to reinvest a lot of the revenue into what we see as very attractive investment opportunities in AI infrastructure and talent. It's hard to assess, what all of those investment opportunities will be over the course of the year as we continue to work through our capacity options. And of course, it remains a very competitive hiring market, but we'd like to invest aggressively where we can. We continue to use our framework that we shared at this point several years ago of growing consolidated operating profit over time to guide those investments. And based on where our plans are rolling up today, again, in 26, we expect to deliver more operating income than we did in 2025.
Your next question comes from the line of Doug Anmuth with JP Morgan. Please go ahead.
Thanks so much for taking the questions. One for Mark and one for Susan. Mark, could you just provide more detail on the progress of the MSL team several months in and more on your view on the path to a frontier model this year? And then Susan, I know you expect to grow operating income in 26. Do you also expect to have positive free cash flow? Just how should we think about the current and any future JVs for data center and compute build out? Thanks.
I'm not sure I have anything else to add on the current progress on this. I mean, that's why I said up front that I think this is somewhat of an unfulfilling time to be answering some of these questions. We're about 6 months into building MSL. I'm very pleased with the quality of the team. I think we have the most talent-dense research effort in the industry, and some of the early indicators look positive. But look, I think that this is a long-term effort, right? We're not here to do this to ship like one model or one product. We're doing a lot of models over time and a lot of different products. And I want to make sure that the work can speak for itself, and also that we all internalize that this is a journey that we're on, and the first set of things that we put out, I think, are going to be more about showing the trajectory that we're on, rather than being a single moment in time. So yeah, I'm quite optimistic, but don't have anything else particularly concrete to share.
Doug, on the first part of your question, we are making very significant investments in infrastructure capacity this year to support our AI efforts. And we believe we're in a strong position to support them with the cash generation of our business this year. And at the same time, we'll continue to explore different paths as we build out our infrastructure capacity that help provide us the long-term flexibility and option value that we look for as we support our future capacity needs against the backdrop of a very wide range of possible capacity demand over the years to come. So we don't have anything additional to announce at this point. We are looking at all of the different opportunities to stand up capacity across kind of the different timeframes that we need them.
Your next question comes from the line of Justin Post with Bank of America. Please go ahead.
Great. A couple, maybe one for Mark and one for Susan. It just seems like you're going to have a tremendous amount of capacity. How do you think about expanding your opportunities beyond ads, things like subscriptions or licensing cloud models, just with all the interesting things you're building? I don't expect any product announcements, but can you do things beyond ads? And then for Susan, it's really interesting to see the acceleration, even ex-FX and advertising. I'm just wondering if you're seeing a general acceleration in e-commerce activity. Where do you think the dollars are coming from, and is the entire internet ecosystem accelerating? And just wondering your thoughts on that.
So yes, we are focused on things beyond ads. I think the numbers make it so that for the next couple of years, ads are going to be by far the most important driver of growth in our business. So that's why as we're working on this, we have a balance of new things that we're trying to do, while also investing very heavily in making sure that all of the work that we're doing in AI improves both the quality and business performance of the core apps and businesses that we run there. But yeah, I mean, we'll have more to share on that. But I mean, all these things, even if they scale very quickly, are going to take some time to be meaningful at the scale of what the ads business is. And while we're doing that, we're just very focused on also delivering more value to businesses and more quality in the apps that we run ads in.
Justin, on your second question, we saw healthy year-over-year growth across all verticals in Q4, with the exception of politics as we lapped the U.S. presidential election last year. The online commerce vertical was the largest contributor to year-over-year growth. That was followed by professional services and technology. So in online commerce, year-over-year growth was strong. It was actually relatively consistent with Q3 levels, and that was broad-based across advertiser regions and sizes. In general, we saw that the demand leading up to the holiday shopping period that sustained through Cyber 5 and into the end of the year, was very healthy for us. Professional services, in this category, we saw strong broad-based growth with nice contributions from lead generation ads due to product improvements we've made, including from Advantage Plus lead campaigns that we fully rolled out at the start of Q4. And the tech vertical continues to be strong for us too, again, broad-based across advertiser regions and sizes. So in general, I would say it was very healthy, broadly driven growth.
Your next question comes from the line of Ross Sandler with Barclays. Please go ahead.
Yeah, Mark, you mentioned bringing Horizon World into mobile. We haven't heard much from the Horizon World squad on these calls, so interesting that that's making it in. It seems like the combo of AI and what you guys have built with Horizon might open up the door to a bunch of new potential areas in gaming or new forms of kind of communication. So could you just elaborate on what the plan is there? Thank you.
Yeah, so let me talk about the basic theme here. One core idea that I've talked about on some of these calls over the years is that people always want to express themselves and experience the world in whatever the richest format is that they can. So I talked about this up front today. It's when we started, a lot of this was text, right? That was the kind of the best we could do. Then we all got phones, they had cameras. Like a lot of this medium became visual, but with photos. We went through a period where the mobile networks were kind of weak, and every time you wanted to watch a video, it would buffer. And once that got worked out, now the majority of the content is video. And one of the core ideas that we have had for a while is that that is not the end of the line. Right? Video will continue to be here for a long time. It's going to continue growing. It's not going anywhere, just like photos and text in many ways continue to grow, even as the market continues to grow beyond that. But I don't think that video is the ultimate kind of final format. I think that this is we're going to get more formats that are more interactive and immersive, and you're going to get them in your feeds. So you can imagine this. I mean, there's obviously a lot of details to fill in on this, but you can imagine, being able to easily through a prompt create a world or create a game and be able to share that with people who they care about, and you see it in your feed and you can jump right into it and you can engage in it. And there are 3D versions of that and there are 2D versions of that. And Horizon, I think, fits very well with the kind of immersive 3D version of that. But there's definitely a version of the future where, any video that you see, you can tap on and jump into it and engage and be kind of experience it in a more meaningful way. And I think that the investments that we've done in both a lot of the virtual reality software and Horizon, as well as a number of other areas around the company, are actually going to pair well with these AI advances to be able to bring some of those experiences to hundreds of millions and billions of people through mobile. So anyway, that's the thing that I'm quite excited about, but it's just sort of one flavor of a theme that I think is going to be very interesting. I think that there are going to be lots of different types of interactive and immersive content that become possible. And I think Horizon is going to be one very interesting example that I'm quite excited to see how this unfolds.
Your next question comes from the line of Ron Josey with Citi. Please go ahead.
Great, thanks for taking the question. I wanted to drill down maybe, Susan, on your comments around ranking recommendation model changes. Clearly lots of tailwinds here, given the results from GEMS, Andromeda, Lattice, consolidation of models, et cetera. So can you help us understand a little bit more just about the roadmap and where we stand within ranking recommendation model changes? There's a thesis out there that maybe there's a limiting factor, or maybe we're waiting on newer models, but any insights there would be very helpful as we think about the next, as the future going forward. Thank you.
Yeah, thanks for the question, Ron. We have, I was sorting out if your question was more specific to ads or if it was more specific to kind of the engagement side, but I'll try to talk a little bit about both. So on the sort of core engagement piece, we launched several ranking improvements in Q4 on Facebook and Instagram that drove incremental engagement. And there isn't really one single launch, that is driving most of the gains. It's, multiple optimizations to our recommendation systems that are helping us make more accurate predictions about what will be interesting to each person. And, I talked a little bit about some of these, the specific instantiations on both Facebook and on Instagram. And we see, a lot of headroom to improve recommendations in 2026, which we expect will drive additional engagement growth on both apps. First, we plan to continue scaling up our models and increase the amount of data we use, including a longer history of content interactions to further improve the overall quality of recommendations. We're also going to start validating the use of ad signals and organic content recommendations as we continue to work towards having a more shared platform for organic and ads recommendations over time. Second, we're going to continue to make recommendations even more adaptive to what a person is engaging with during their session, so the recommendations we surface are more relevant to what they're interested in at that moment. And finally, we will work on more deeply incorporating LLMs into our existing recommendation systems, given their capability to more deeply understand content. And so this will, I think, in particular, be useful for content that has been more recently posted, since there's less engagement data to base recommendations off of. On the ad side, again, we've talked about a lot of the sort of model work in the ads world across Andromeda and Lattice and Gem. I'll touch maybe specifically, on Gem in Q4, we extended Gem to cover Facebook Reels. Now it covers all major surfaces across Facebook and Instagram. We also doubled the size of the GPU cluster we use to train it. And in 2026, we're expecting to meaningfully scale up Gem training to an even larger cluster, increasing the complexity of the model, expanding the data that we train it on, leveraging new sequence learning architecture that we had begun deploying in Q4. And we're also going to further improve how we transfer the learnings from our Gem foundation models to the runtime models that we're using. So, there's a lot more headroom, I think, across many components of the stack. This is the first time we have found a recommendation model architecture that can scale with similar efficiency as LLMs. And, we're hoping that this will unlock the ability for us to significantly scale up the size of our ranking models, while preserving an attractive ROI.
Your next question will come from the line of Ken Gawrelski with Wells Fargo. Please go ahead.
Thank you very much. Two, if I may, please. First, for Mark, how critical is it for Meta to have a leading general purpose model, or is there sufficient capability in a model that really excels at specific use cases, maybe similar to what you see at Anthropic in coding today? We'd love to, if you could opine on that. And then second, maybe I just want to push again, maybe on this last question, Susan, on the visibility you have. You talked about the improvements you're making in 26 on the models, the fine tuning of the core, both in engagement and ad relevance. Could you talk about, are you seeing any signs of diminishing returns to those investments? And do you have visibility beyond 26 into further opportunities there? Thank you.
I think the question was around how important is it for us to have a general model? The way that I think about Meta is we're a deep technology company. Some people think about us as we build these apps and experiences, but the thing that allows us to build all these things is that we build and control the underlying technology that allows us to integrate and design the experiences that we want, and not just be constrained to what others in the ecosystem are building or allow us to build. So I think that this is a a really fundamental thing where my guess is that frontier AI, for many reasons, some competitive, some safety oriented, are not going to always be available through an API to everyone. So I think like it's very important, I think, to be able to have the capability to build the experiences that you want if you want to be one of the major companies in the world that helps to shape the future of these products. So that I think it's going to be, I think, important from a business perspective, and I think it's just important from like a creative and mission perspective to be able to actually design and build the experiences that we believe that we should be building for people. But yeah, I think it's quite important. Otherwise, we wouldn't be so focused on this. We're clearly extremely focused on this.
On your second question, interestingly, a year ago on this call, I think I talked about the set of investments we were making in 2025 as part of our 2025 budgeting process across our ads performance and organic engagement initiatives. And those investments have generally paid off, and we feel really good about kind of the process we ran in terms of using projected ROI to stack rank investments, make sure that we, had a robust measurement system, funded things that were positive ROI, and then tracking how they performed over the course of the year. And we are, we've just finished running our 2026 budgeting process, and we have funded a similar set of investments, which we expect will enable us to continue delivering strong revenue growth in 2026. Having said that, I expect both full year reported and constant currency revenue growth to be below the levels in Q1 for a few reasons. First, we would expect that currency tailwinds will dissipate later in the year based on current rates. Second, we'll be lapping stronger periods of growth later in the year that benefited from our 2025 ad performance investments and the strong macro landscape. And finally, we expect there could be some headwinds from our introduction of the revised, less personalized ads offering in the EU that begins rolling out later in Q1. But again, similar to 25, we feel good about the process by which we identified investment opportunities with attractive ROIs and funded them as part of our budget to support, key initiatives across our ranking and recommendation systems and to increase the capacity efficiency of our models, all of which are key to sort of driving growth for us.
Your next question comes from the line of Mark Mahaney with Evercore. Please go ahead.
Okay, 2 questions, please. Meta AI, any update on what you're seeing there in terms of engagement and usage? And do you think you're just starting to be able to apply improvements to that specific functionality? And then just real quickly on share repurchases, Susan, I don't think you bought any stock back in the quarter. It's been a while, maybe a year since you haven't bought anything back. You talked about capital allocation a little bit into the year. It didn't sound like you're going to be buying back stock anytime soon, but just you want to clarify that? Thanks a lot.
Yes, I'm happy to take both of those. So Meta AI, the quick update there is, it's now available in over 200 markets. The largest daily active user markets for Meta AI align with where our apps are also very popular. Though the apps people engage most with Meta AI differ. In some places, it's primarily WhatsApp driven, for example, India or Indonesia. In the US, Facebook is a stronger driver of engagement. And in general, we see a lot of opportunity to make it easier for people to accomplish the tasks that they already come to our services for every day. And if we do that well, then the way people use our products will continue to expand. So we're focused on making Meta AI the most personalized assistant while tapping into the vast amount of information, trends, content from our platform to offer differentiated insights. And we think we have a very strong track record in building highly personalized experiences, and we're bringing that into Meta AI so that we can tailor responses to each person's personal interests and preferences. On your second question, which is about share repurchase, share repurchase levels will vary from time to time for a lot of reasons, including whether we believe there are areas that have a greater near-term need for capital. Right now, we think the highest order priority for the company is investing our resources to position ourselves as a leader in AI. And so that is really that's kind of the first order use of capital, but we'll continue to be opportunistic and evaluate repurchases versus versus other uses of cash.
Great. I think we will wrap it here. Thank you everyone for joining us today. We look forward to.
All right. That's Meta going to Tesla now.
Make sure that the environment is great, nature is great, and people can have whatever they want, which seems like probably the best future. I'm open to other ideas, but that sounds like it sounds like if you could say what is the best future you could possibly imagine, that everyone can have whatever they want, including amazing medical care, but we still keep the beauty of nature and Earth. I think that's probably the best outcome. And we're seeing obviously the first steps along that way this year for Tesla, first major steps as we increase vehicle autonomy and begin to produce Optimus robots at scale. We're making very, very big investments. So this is going to be a very big capex year, as Vaibhav will get into. That is deliberate because we're making big investments for an epic future. So I think all these investments make a lot of sense. We'll continue to make sure that when we do spend capital, it is spent very efficiently. But it's a lot of things. Major investments in batteries and the entire supply chain for batteries. We're also going to be significant manufacturers of solar cells, and we're making massive investments in AI chips. So, but I think these all make a ton of strategic sense, and then I guess I have like one, I guess it's not exactly bad news, but it's time to basically bring the Model S and X programs to an end with an honorable discharge, because we're really moving into a future that is based on autonomy, and so if you're interested in buying a Model S and X, now would be the time to order it, because we expect to wind down S and X production in next quarter.
That's crazy.
And basically start production of Model S and X next quarter. We'll obviously continue to support the Model S and X programs for as long as people have the vehicles, but we're going to take the Model S and X production space in our Fremont factory and convert that into an Optimus factory, which will, with the long-term goal of having 1 million units a year of Optimus robots in the current SX space in Fremont. So that is it's slightly sad, but it is time to bring the SX programs to an end and shift really. It's part of our overall shift to an autonomous future. As my profile picture on X said for a few months there, the future is autonomous. So let's say with respect to full self-driving and robotaxi, people are obviously following with very close attention the progress of FSD, and you can experience it for yourself. If you've got a Tesla, you notice with every software update, the car gets better and better at autonomy, and we're we're able to do our first rides with no safety monitor in the car in Austin. These are paid rides, so these were just sort of randomly selected paid rides with no safety monitor, and we're, I think maybe as of maybe yesterday or so, we actually don't even have a chase car or anything like that. So these are just cars with no people in them, and no one's following the car in Austin. So we obviously are being very cautious about this because we want to have no injuries or serious accidents along the way. So I think it makes sense to be very cautious, but you'll see the amount of autonomy increase dramatically, I think, every month essentially. So then there will also be an opportunity, something we've talked about for a long time, for existing owners of Teslas to add or subtract their cars to the fleet, kind of like how Airbnb works, where you can add or subtract your house to the Airbnb inventory. And I think probably the value of the Tesla, the sort of partial people adding or subtracting their cars to the Tesla autonomous fleet is probably a little underweighted by a lot of people, because we've got millions of cars with AI4 that can do this. So, so it's that it might potentially, I think it will provide an opportunity for a lot of customers to earn more by lending their car to the fleet than their lease cost to Tesla. Yeah, which is it's kind of like you get in that scenario, you basically get paid to own a Tesla. It's quite a good scenario. And we expect to have fully autonomous vehicles in probably, I don't know, somewhere between a quarter and half of the United States by the end of the year, pending regulatory approval. A big factor would be if there's some kind of federal preemption for autonomous vehicles. In the absence of that, you kind of have to go on a city by city or state by state basis. But nonetheless, we even if it is city by city, state by state, we expect to be in, I don't know, dozens of cities, dozens of major cities by the end of the year. With respect to energy, the Tesla energy team has done incredible work, and the growth rate on that is continuing to be very strong, and we're building more manufacturing capacity, and expect that and energy will have very high growth for really as far into the future as we can imagine. The solar opportunity is underestimated. We think the best way to add significant capability to the grid is, or not to the grid, let's say it's powering AI data centers, is solar and batteries on Earth and solar in space. So that's why we're going to work towards getting 100 gigawatts a year of solar cell production, integrating across the entire supply chain from raw materials all the way to finished solar panels. Maybe a bit more about Optimus. We'll probably unveil Optimus 3 in a few months, and I think it's going to be quite surprising to people. It's an incredibly capable robot, and as I mentioned, we're replacing the SX line in Fremont with a million unit per year line of Optimus. Now, because it is a completely new supply chain, there's really nothing from the existing supply chain that exists in Optimus. Everything is designed from physics first principles. So that means the normal S-curve of manufacturing ramp will be longer for Optimus than it is for products that have at least some portion of an existing supply chain. Like when everything's new, the production rate will be proportionate to the least lucky, least confident part of the entire supply chain. And if there's 10,000 things that need to go right, it's, it only takes one to be slow to lag that. But so it will be sort of a stretched out S-curve, but I'm confident that we'll get to 1 million units a year of in Fremont of Optimus 3. And this Optimus really will be a general purpose robot that can learn by observing human behavior. So you can like demonstrate a task, or literally verbally describe a task, or show it a task, even show it a video, and it will be able to do that task. So it's going to be a very capable robot. I think long-term optimists will have a very significant impact on the US GDP. Like it will actually move the needle on US GDP significantly. So in conclusion, there's still obviously many who doubt our ambitions for creating amazing abundance, but we're confident it can be done, and that we're making the right moves technologically to ensure that it does. And Tesla's obviously never been a company to shy away from solving some of the hardest problems. It's I think that's kind of how you build value in a company, is you solve hard problems. It's like, I don't know how you create value by solving easy problems. So there's a lot of hard problems that the Tesla team is going to solve, but it's an incredibly talented, hardworking team. And I'd like to thank actually everyone at Tesla for their incredible hard work. And it's an honor to work with such a talented group. So thank you to everyone who is supporting this mission. The future is more exciting than you can imagine.
Fantastic. Thank you so much, Elon. And next we have some remarks from Vaibhav. Go ahead.
Thanks, Travis. So Q4 25 was an interesting quarter in a couple of respects. On the autos front, while in Q3 we saw a surge in US demand before the IRA consumer credit cliff, pulling in some demand from Q4. In other parts of the world, we saw increase in demand leading to record deliveries in smaller countries like Malaysia, Norway, Poland, Saudi Arabia, and Taiwan, while continued strength in the rest of APAC and EMEA. We therefore ended 2025 with a bigger backlog than in recent years. Note that none of these countries have the latest version of FSD supervised available yet. On the storage front, we hit yet another record in terms of deployments. I would like to thank our customers and Tesla in continuing this momentum. On the automotive margins front, automotive margins excluding credits improved sequentially from 15.4 to 17.9%. The automotive gross profit was flat sequentially despite 16% lower deliveries, primarily due to regional mix as we had proportionately more deliveries in APAC and EMEA. As we look to 2026, with the progress that has been made with autonomy, our focus is on ramping production at all our factories. Our biggest constraint globally continues to be on the battery pack front. While our teams have been creative in trying to resolve the situation by now putting 4680 cells in non-structural packs, we continue to iterate, improving things from here on. FSD adoption continued to improve in the quarter, reaching nearly 1.1 million paid customers globally. Of these, nearly 70% were upfront purchases. It is important to note that beginning this quarter, we are transitioning fully to a subscription-based model for FSD. Therefore, net additions to this figure will primarily be via subscription model, and in the short term will impact automotive margins. On the energy front, we achieved yet another record in terms of gross profit for the quarter and ended the year with nearly $12.8 billion in revenue, a 26.6% year-over-year growth. This was the result of high deployments in all regions and continued strength in demand for both Megapack and Powerwall. As we look at 2026, our backlog remains strong, well diversified globally, and we expect increasing deployments with the launch of Megapack 3 and Megablock. However, we expect margin compression from the increased low-cost competition, impacts to market from policy uncertainty, and the cost of tariffs. Services and others margin declined from 10.5% to 8.8%, primarily from higher employee-related costs for service centers as we start preparing for the ramp in activity from the growth in the fleet size. We did see a momentum in margin. We did see an improvement in margin from our supercharging business, which is included within services and other. Additionally, note that our robotaxi business related costs, while not material, are also included within this. Given that we're still in the early phase of our fleet deployment and are still doing a lot of validation testing, the revenue and cost per mile metrics are not meaningful to discuss at the moment. Then on total gross margin front, we ended the quarter with over 20.1%, something which we haven't achieved over the last 2 years. This improvement came despite the impact of lower fixed cost absorption and the impact of tariffs, which were in excess of $500 million in Q4. Operating expenses increased sequentially, primarily from increased stock-based compensation for employees, and as we started recording charges for one operational milestone under our 2025 CEO Performance Award that was deemed to be probable over the award term. Additionally, our spend on AI-related initiatives and new products like CyberCab, Semi, Optimus, and Megapack, etc., continues to be at elevated levels, and we expect this trend to continue for the full year 2026. Net income was negatively impacted from mark-to-market charges on a Bitcoin holding, which depreciated 23% as compared to the last quarter, and the impact of unfavorable impact of FX, primarily from our large intercompany borrowings. On the free cash flow front, we ended up at $1.4 billion. We did end up capex being slightly below our previous guidance of $9 billion, but as Elon already mentioned, this year is going to be a huge investment year from a capex perspective. And at the moment, we're expecting that capex would be in excess of $20 billion. We'll be paying for 6 factories, namely the refinery, LFP factory, CyberCab, Semi, a new mega factory, the Optimus factory. On top of it, we'll also be spending money for building our AI compute infrastructure, and we'll continue investing in our existing factories to build more capacity. And then, also the related infrastructure along with it. And we'll also further expand our fleet of robotaxi and Optimus. While this may seem a lot, we believe this is the right strategy to position the company for the next era. And we'll make such investments, as Elon mentioned, in a very capital-efficient manner. Note that this does not include potential investments in solar cell manufacturing or our Terafab, as we're still in early phase, and we plan to provide an update in future quarters. We're starting not the next chapter, but a new book on the progression of this company. 2026 year would be when all of this began. While at times it feels daunting, it is going to be the most exciting change in Tesla's history, and we could not have even dreamed of embarking on this journey without the support of our customers and our investors. Thanks for again showing the confidence in us, and let's get ready for a future of amazing abundance. Thanks.
Great. Thank you very much, Vaibhav. Now we're going to head over to investor questions. As always, we will start with questions from say.com. The first question is, today there are approximately 90 million cars sold globally each year. Does Tesla have a view based on its robotaxi ambition, what this number will be in 5 or 10 years? And how does this impact Tesla's EV strategy to have more models?
Yeah, thanks, Travis. As Elon said, the future is autonomous, and obviously autonomy and CyberCab are going to change the global market size and mix quite significantly. I think that's quite obvious. General transportation is going to be better served by autonomy as it will be safer and cheaper. And over 90% of vehicle miles traveled are with 2 or less passengers now, which is why we designed CyberCab that way. In this new autonomous market, we at Tesla have the advantage of efficiency, cost, and manufacturing at scale that really no one else has. And we've built that over the last decades. And we believe that that segment that we are creating will grow millions year over year.
Just to add to what Lars said there, it's worth the point that Lars made, which is that 90% of miles driven are with 1 or 2 passengers, or one or two occupants, essentially, is a very important one, because that implies that the CyberCab, which is a dedicated 2-seater dedicated robotaxi. It's a little confusing with the terms robotaxi and CyberCab. Sorry about the confusion, but And in fact, in some states, we're not allowed to use the word cab or taxi. So it's going to get even more strange. It's going to be like cyber vehicle or something, cyber car. But the cyber cab, which is a specific vehicle model that we're making, does not have a steering wheel or pedals. So this is clearly, there's no, there's no fallback mechanism here. It's like this car either drives itself or it does not drive. And we expect to start production in April. As always, it's an S curve of the production rate is an S curve. So it starts off very slowly and then grows exponentially. Then you hit the linear, and then ultimately, it asymptotes at whatever your target volume is. So, but we would expect over time to make far more cyber cabs than all of our other vehicles combined. Given that 90% of distance driven or distance traveled, exactly, no longer driving, is one or two people. I think it's like 80% is just one. So it would mean that long-term cyber cab would make several times more cyber cabs per year than all of our other vehicles combined.
Great. Thank you so much. The next question, a bit related, are there still plans to launch new models to address different price segments and vehicle types, which could materially expand the TAM for Tesla?
Yeah, to further on what we were just talking about, we've launched our least expensive models ever over the last few months and are continuing to expand those models globally. And over the last decade, we have continually brought down the cost of our vehicles without sacrificing range, performance, or premiumness. And we'll continue to do that, as Vaibhav said, investing in our factories. But these are all trade-offs of where we spend our time or money. And to Elon's point just now, with Cybercab coming, we are aiming to bring that Tesla premium ride experience to our largest market yet. That could be 5 or 10 times our current levels of production. This new autonomous market, you have to start thinking about us as moving to providing transportation as a service more than the total addressable market for the purchased vehicles alone. And of course, we do have plans to have robotaxis in various shapes and sizes, but obviously Cybercab will be the grand majority of that volume.
Yeah, the vast majority of miles traveled will be autonomous in the future. I would say probably less than, I'm just guessing, but probably less than 5% of miles driven will be where somebody's actually driving the car themselves in the future, maybe as low as 1%.
Great. The next question is, historically, Tesla has spoken about gross margin per model. Are there standalone gross margin targets for the current models, excluding the benefits for FSD sales?
We've talked about this with the previous two questions, but transportation, as we know, is changing. And I think we cannot keep applying the same framework from a car sales model to the future, what we are trying to do. So it has to be looked at it more holistically. Autonomy software will be the driver for growth from now on. And as we aim to maximize the global fleet, we have been laser focused on COGS from our side to make sure, because that is something which we manage. So we will keep focusing on that, but I think we need to look at it from a different dimension.
Yeah, like this Cybercab, the whole design of Cybercab was to optimize the fully considered cost per mile of autonomous driving. And